So, without any further ado, that brings me to day four of the Financial Freedom Accelerator. You have all known what the agenda is, but let me quickly run it down for you again. So, on day one, we learned finance for the future, wherein Aditya taught you about prepayment. I taught you very simple financial concepts. I broke down logical frameworks on how to go about investing simply, what are the right steps, what is the right framework, logical analysis, everything. Then on day two, we learned about building strategies. All of you learned how the layering concepts work. Stock option strategy. It's amazing that some of you have now learned stock option strategies on day two, wherein you did not know anything about it before you joined on day one. Right? Yesterday we learned how to automate trading, everything to do with AI, how you can leverage AI in your trading, be it to backtest, be it to create strategies or logics, and also how you can automate it as well. And that brings me to day four, something that we, all of us, I think will benefit from is on how to use AI in investing and multi-baggers, right? So, right, quickly, before I move on to day four, let me summarize what we did in day three yesterday. So first and foremost, we did data analysis using custom GPT, that is, use the Market Analyst Pro custom GPT by SpringPad. Yes? How about a quick yes? A shout out to whatever we have learned yesterday. Yep. Yes. Perfect. Then we learned about seasonality, and also Prateek shared a custom TradingView seasonality indicator with all of you, which you can run on any script on TradingView, right? We learned how to generate logical frameworks using custom GPT for trading, right? Then we learned how to backtest a strategy using Claude, any strategy using Claude. Amazing power to all of us now, even those not belonging to, let's say, quantitative coding background, correct? We learned how to do custom moving average crossover indicator in TradingView. We learned about the Bulls AI platform to completely automate your trading. Was it really a full encompassive view of all that you could do in trading, the entire process flow right from the start to the end, to absolutely automate it with the power of algo trading, and that too how you can use AI, right, the right way to set up frameworks for your trading? Absolutely amazing. Yes. Perfect. Before I move on to what we are going to cover in day four, we are going to cover a lot today, by the way. You are in for a very busy Sunday morning. Before that, let me take you through the rules of the FFA one more time. First and foremost, whatever you think you know about, how to go about investing, forget about it. Okay? No prior knowledge is required. Empty the cup. Okay? Next thing, do the work, take notes, anything you feel which is important for you, you find extremely useful, make a note of it, because as you know, we will not be providing any recordings of the FFA to anybody, because we truly believe those of you who are making time, taking the pain to attend this, only you should have access to this. But 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 as I had promised to you on day one itself, all of you will be getting access to a you know a 70-page PDF or so that we have built, so that you have all the steps that we have taken documented from day 1 to day 4, all the things that we're going to teach. Okay, right? And another most thing important thing is participate like you have wonderfully across the last 3 days. Participate, be the most active you have ever been on a Zoom call. And as you guys know, the more energy, the more the learning, because you will zone out less. And I hope that none of you zone out today. As I said, we're going to cover a lot of things today. And you do not pay attention, you lose opportunities. So please make a conscious effort to, these 3 hours. Make sure that you give me your absolute focus. And I'm pretty sure you'll be thanking me at the end of it. Okay, which brings me to the agenda that we have for day four, which is, drum roll. I have made 25 pages of notes. That's amazing. Don't worry. We'll also give you all the detailed steps and everything. Okay. So, the agenda for today, first and foremost, we are going to see how we can, understand concepts which will help us filter fundamentally strong companies. That's the first most important thing is to ideate quality stocks, right? Then we'll be seeing how you can use AI to compare companies, which is going to be a very, very crucial step because we always have to end up making decisions, right? A stock cannot just be good. The price of a stock cannot just be, you know, is the price okay? The second layer of questioning is okay, but with respect to what? With respect to its peers, with respect to how it is supposed to perform. So, comparing is very, very important when it comes to identifying good opportunities. Then we'll see how we can use financial analysis using AI, something a lot of people don't have any clue on. The income statement, balance sheet, P&L, how to make sense of it, how do they interconnect, what are the not only quantitative aspects but also the qualitative aspects. We will do all of that, and then we'll also use, see how we can analyze and filter small cap stocks using AI. And last but not the least, I'll be walking you through rather a golden checklist, right? A seven-step framework, which will basically help you understand what are the good small cap stocks because there are so many, right? And it is very important that you are choosing the right ones and doing proper thorough research and analysis on it. Okay. So that is the agenda for today. As I said, we're going to cover a lot, correct? Just before I get started, I want you to let me know that you're there with me, absolutely ready, with absolute focus and attention. Yes, yes, ready, excited. Perfect, 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 perfect. Okay. Now, before I start, first question. Okay. Tell me one thing. On a scale of 1 to 10, how strongly do you feel self learning the basic concepts of financial markets will make you successful as an investor or trader? And be very honest. 1 to 10. Okay, 3, 1, 10, minus 10, 7, 6, 3, 2, 1, 4, 3, 8, 2, 0.5. Okay, that's funny. 0.53. Okay, so majority of you, I can see that it's below, 5. A few of you are saying 9, 10, 7. And I'll tell you what, self-learning will be sufficient. The statement is one of the biggest misunderstandings in the markets, right? Why do I say that? I don't mean to discourage anybody, but many of us have heard that, self learning will be sufficient for success in trading. Everything is there in the internet. This is actually one of the biggest misunderstandings in the field. While learning on your own is essential, it's just a piece of the puzzle. Why do I say that? Now, having access to expert insights, collaborative learning can significantly enhance your understanding and skills. For example, it's trying to learn a new language, right? Sure, you can pick up some basics on your own here and there, but you will only actually be able to master it once you start talking in that language to different people via practice, via experience, from people who already know it. When you interact with them, that is what makes a difference. Correct? Now, having said that, let's try and take this into our learnings. First thing that we want to tackle, and I saw a lot of questions which I was happy to see when I said small caps, that what exactly are small cap stocks? All of you know what small caps are? Yes, no, me, yes. So mixed bag, okay. Well, in India, small cap stocks are shares of publicly listed companies whose market capitalization is below 5,000 crore as per SEBI, right? So there is another consideration over here, either below 5,000 crores, right? Or it is usually, remember we ranked Nifty 50. What did I say? Nifty 50 is the 50 biggest companies or the most valuable companies in India. Now, for example, if you rank out from top to bottom, biggest to smallest, all the companies. The other categorization is 251st company onwards, right? Which is usually around the less than 5,000 mark. These companies are called as small cap companies. Okay. And what are the advantages of small caps? Like these stocks, because they're very small, they're relatively smaller businesses, nascent businesses, they have high growth potential. Goes without saying, right? If something is small, it has the room to grow. When you're already, let's say, have crossed 18 years of age, let's say you're already 6 feet tall, you don't have much room to grow. But when, let's say, you are 7 years old and maybe just at 4 feet height, you have a lot of room to grow. Another advantage is that these are often undervalued or undiscovered, correct? Because these are relatively smaller companies, not a lot of people talk about it, and there's less public interest. What happens is demand supply factor kicks in less, correct? And these stocks have a tendency of being overvalued, undervalued, okay? Because not too many people know about it. And as a result, they have a potential of delivering multi-bagger returns over time. What do I mean by multi-bagger? So, well, let's say if a stock goes up 10%, what do we say? It's increased by 10%. But if a stock grows up by 100%, basically what is happening? It is becoming double, correct? So, whenever we say it is becoming double or triple or 4x, 5x, 10x, that nomenclature is what we call as multi-baggers. Whenever, think of it this way, whenever we are calling, talking about how a stock has performed, let's say in terms of multiples and not percentages, excuse me, that is what we call as multi-baggers. Cool. Now, see, my job is not only to tell you what is good, my job is also to give you a realistic expectation. There are, like there are advantages, there are disadvantages as well, or there are risks. Because these are smaller companies, they have high volatility and lower liquidity. Now, all of you know volatility, right? These are small stocks, they can be fairly risky, their prices can move a lot. Liquidity is basically how much of a particular stock is being traded in the exchange, correct? How many quantities are people buying and selling on a particular stock, okay? Right? How much activity is there? Now, tell me something. If there is very little activity, very few people are buying and selling a stock in a particular day, uh, right? And you want to sell, let's say, 1 lakh shares of that stock. Will you have buyers to purchase 1 lakh shares? No. So that's going to be a problem. And now, for example, on the other hand, if you take any of the Nifty 50 stocks, right, which are very, very active, if you want to sell 1 lakh shares today, nobody is going to bat an eye. It is going to be like this, right? You can sell it in a couple of seconds. So, this phenomena of how much activity is there is what we call as liquidity. Okay. So, these have low liquidity and high volatility. Secondly, they are more sensitive to economic cycles, right? What do I mean by that? Let's say the market is booming, right? People are buying, buying, buying. Majority of the buying happens in the bigger companies, the more famous companies, right? And when the other thing happens, when the markets are going down, correct, the first stocks that bleed are these small companies because people have lesser conviction in them, right? And as a matter of fact, because they are smaller, they are nascent, right, they are riskier, so they are more sensitive to economic or market cycles and higher business risk due to smaller scale. Of course, a smaller company will be, you know, facing more business challenges in terms of, let's say, cash flow and everything than, let's say, something like an established company which has been operating for many, many years, like at, you know, uh, scales of, let's say, 50,000 crore revenue, 1 lakh crore revenue, so on and so forth, right? They always have a safety net, whereas smaller companies, they might lack it. So, like there are advantages, there are risks. to small caps as well. Understood what small caps are? Yes, yes, perfect. Now, as I said, small caps are volatile. So if you can't handle volatility, you should stay away from small cap stocks. Okay? If you, let's say, I'll tell you realistically what happens if you are entering into a small cap and if you look at a small cap portfolio as well. For example, let's say you invest in a small cap mutual fund. The amount of up and down your small cap mutual fund will have will be much higher than, let's say, a large cap mutual fund. So if you're somebody who is uncomfortable with a lot of price movement in your investments, then you should stay away from small cap stock because as I said, these are very, very volatility. Okay? Okay. One who has no knowledge of this stocks, how do they benefit? I think there are so many of you, right, who did not have any knowledge. Have you found any value across the 3 days of the FFA that you have had already? Yes, we have constantly tried to make it simple. And this is, I think, one of the skills that everybody should at least learn and be aware of. Okay. Now, coming back, okay, as I was saying, that if you can't handle volatility, stay out because, see, there is a basic rule in the market, which is what we call as the risk return metrics. Okay. Why do FDs give you 7%? Whereas, let's say, something like the Nifty 50 on average has been giving you 12, 13%. Why is there a difference in terms of returns? Correct? Why can't FDs also give us 13%? Because FDs are low risk. You are aware that, okay, if you went for a 7% rate of return, you will get 7% every year. There is no uncertainty there. But when somebody says the Nifty 50 has given 12% average return over the last, 13% average return across the last 10 years, does that imply that every year you are going to get 13% itself? No, it means on average. Some year it can be negative also. Some year that can, Nifty returns can go up to 20%. On an average across a time period, it is giving you, let's say, 13% historically over the last 10 years. So it is riskier than FD. It is more uncertain than FD. Yes, that is why we have a concept called as the risk return trade off, wherein if you want higher returns, you have to take on higher risk and vice versa. Okay, so this is how the risk return graph looks like. The higher the risk taken, the higher the potential return. So again, it depends on what sort of a risk appetite you have, because for small cap stocks, you know you need to have a high risk appetite as well. Now, having said that, I want to take you to Mr. Warren Buffett and something which he said back in the day. Now, Warren Buffett made a bold bet, okay, of $1 million against a group of sophisticated hedge funds. The challenge was to see who would come out on top over 10 years of time, not just in a single year, 2 years, who would perform the best. And I think it goes without saying, we know that Warren Buffett won. But the funny part is, right, he did not do anything fancy. Instead, he relied on a technique that doesn't require any special investing skill at all. Let's see the returns, right? So this is what a few funds. This was in his, every year he used to give this annual letter to shareholders, the AGM. It's widely anticipated in the markets. Okay. So in 2017, he did this, right? He gave this uh, chart. Okay. These are all the hedge funds, and this is what his investment strategy was able to make significantly higher, which was just to invest in S&P 500. Like we have the Nifty 50, what he did was just simply invest in the US index, which is the S&P 500. And that was a simple strategy, just by index funds, right? But then we might be thinking that, if hedge fund managers can't, they were not able to beat the market, right? Hedge funds are like mutual funds. Think of it like mutual funds, but only for HNI investors. And like in a mutual fund, you can only buy a stock In as a hedge fund, you can buy, sell, use options, anything you can do. You can go long, go short. There are fewer restrictions on what you can do. Correct. So these are more active portfolio management strategies. HNI, high net worth individuals. So you have to have, let's say, in the US, if you want to invest in a hedge fund, I think you need $1 million ticket size. Okay. In India, it is about, we call hedge funds as AIFs in India. It is around 50 lakhs. Correct. Alternative investment funds. In India, hedge funds are called as AIFs, alternative investment funds. Now, now the question is, if hedge funds managers can't beat the index, and by the way, these are the smartest of the smartest people, right? Creme de la creme, students, best of the best, one of the highest paid people in the, not only in the industry, but in the entire salaried pool. If they can't, how do we expect to beat the markets? Any guesses? Why are we discussing all this? Because they have a problem that they face. What is that problem? It is the big player problem, right? Now, what are these? Right? They're too large to be nimble. For example, huge AUM, and before you ask me, AUM is the total fund pool. Huge AUM means they can't meaningfully invest in small caps where big gains happen. Okay? Okay? And what do I mean by that? For example, let's simplify it. Let's say a mutual fund. They operate with on an average, let's say around 8,000 to 10,000 CR of capital. Now, let's say if there's a small cap stock, okay, we're looking at, let's say, a company which is around the 5,000 crore mark. Okay. If they want to buy even 10% of that company, buying 10% of a company by one single mutual fund will drive the prices up like crazy. And on the flip side, when the mutual fund tries to sell it, right, only one, we're talking about one mutual fund, not all the mutual funds, right? And just imagine if one tries to buy it, that buying 10% shares of a company itself will drive up the price, right? Okay. When they're trying to sell it, it will itself, bring down the price. And just imagine all the mutual funds trying to invest in, let's say, a particular small cap stock. Is it viable to invest? It will basically be a buy high, sell low. Correct, Vaibhav? Is it viable to invest? Even though it is a very good opportunity, there is a structural limitation to it. Got it? Now, let's see this. Let's see this actually. For example, let me pull up Reliance. Okay. Over here, what is the market cap of Reliance? Almost 20 lakh crore, right? The value of Reliance is almost 20 lakh crore, correct? 20 lakh crore, right? Now, for example, a mutual fund only, let's say in our a context, 10,000 crore mutual fund, even if they want to invest 10%, right? They ideally invest lesser. 10% of 10,000 crore is 1,000 crore. If they buy 1,000 crore of Reliance, is it going to make any difference to Reliance? Nothing. It's still, just a tiny fraction of the total value of Reliance. Is it going to move Reliance's price? Absolutely not. Okay. Okay. So there is no structural limitation over here. But let's take another example, right? This is Vasa Dentist City. Okay. They're like an e-commerce platform, B2C, right? And B2B for dental products, right? Very, very promising business scenario, right? And they have a market cap of 1,000 crores only. Now, if any mutual fund wants to buy this, okay, do you think it's viable? If a mutual fund wants to buy this, their intention to buy or sell, getting out of the position, will itself drive up all the prices, right? So they won't be able to make any returns only. It's a structural limitation that they have. Got it? I hope this example makes it easier for you. Yes. Okay. So we'll keep things a little more practical today. We'll look at a few examples. So that's the first problem, right? Too big to be nimble. Secondly, liquidity limits. This I've already explained, right? Liquidity limits are required. Like you, since there is very little activity, they won't be able to buy, in a simple fashion. They won't be able to buy enough stocks every day. It'll take them 6 months to a year to build up a position, right? And it'll take them 6 months to a year to sell a position. Now, we know that how the markets are sensitive to news and information, right? You need to be fast. Bad news comes out, the performance of the company is not good, you will definitely try and get out. But if it takes you 6 months or a year to get out, is that something which is a smart move? You won't get into that space, right? If there's a probability of you getting stuck. So, similarly, these big players, they have this liquidity problem as well. They're hence what happens is they're forced into the crowded large cap space, right? Where it can take their capital. For example, Reliance, as we said. But the problem is all these smart people, all these mutual funds, hedge funds, right? They're all competing in the same pool of big enough companies who can take their liquidity, correct? And all of them are professions, all of them are well researched, and these large cap stocks also tend to move slower, correct? So there is a structural limitation again into a crowded space that they can only operate in. And last but not the least, right, the slower moves. As I said, large trades takes days, even if they're building a position in a large cap company. Let's say 1000 crores they want to deploy in Reliance, right? They won't be able to deploy 1000 crores right away in Reliance. They will gradually keep on small amounts. They'll keep on buying over, let's say, a week or 2 weeks. That is how they operate in. And lastly, they have a very high fee structure, especially hedge funds. They have a 2 and 20% fee structure. That means 2% of how much capital they're managing, they will take irrespective. And if it is profitable, they'll take 20% of the profits as fees. Now, this in itself, because they're already fighting in a crowded space and generating, let's say, there's a limitation on the amount of return that they can generate. This 2 and 20% eats down the returns for investors even further. Makes sense to all of you guys? Yes. And where there is a problem structurally for all of these big players, it is an advantage for us, correct? Because otherwise, why have we been teaching you strategies across simple investing, trading using AI, if the best way would have been index funds, right? There's nothing else that you can do apart from index funds, because we have an advantage when it comes to operating in this space. What are these advantages? We have small size. Is any of us going to put 1000 crores in a single stock? No, right? At best, let's say we are going to put a few lakhs in a particular stock. And because the size is so small with respect to the market cap of the stock, we have speed. Like we can instantly, in a second, we can buy 10 lakh rupees ka shares, we can sell 10 lakh rupees ka shares also. So we are nimble that way. We can get in at an opportune time, we can get out at the right time as well. We don't have to wait around. Then no liquidity problems. As I said, our 5 lakh rupees, 10 lakh rupees, 20 lakh rupees, whatever, is a very, very small part of the daily activity. And liquidity for us is also not a problem. Third, less competition. Like we have the capacity to look at smaller, as a value investor, right? Or as a small cap investor, we have the opportunity that if we are able to research good companies, we can invest in them, right? Because there is less competition. Overlooked companies, right? All these big players, because of the structural problem, they will not try to devote the research and analysis time in very, very small companies, correct? And hence you're not battling with the best of the best minds, the top hedge funds, the mutual funds, again on the same ideas, correct? So we are operating in a less competitive space. Who are you competing with? Other people like you. And only people, if let's say you are doing your thorough analysis, you find up with a good stock, chances are that very few people know about it. So it's a good thing. You're not competing with anybody, right? Then we can be fast to act. As I said, speed, right? You can buy or sell instantly without waiting days. And last but not the least, we don't have to pay anybody a 2 and 20% fee structure. Simple strategies keep almost all the returns in your pocket. And especially because you're investing, and of course, when you're investing, you should give your investments time. If you're doing long term, brokerages are hardly going to be anything, correct? Because most of the brokers nowadays for delivery trades, they don't charge anything. There'll be a small amount of STT and all that. It's hardly going to be anything 0.03% or so. And your long term capital gains is only 12.5% of your profits. Okay? So, did we just learn that small cap stock is difficult to liquidate? Yes, liquidity is lower, but liquidity is also something that you need to understand with respect to how much capital is being deployed. Of course, for a 5,000 crore market cap stock, if a hedge fund wants to buy 1,000 crores, liquidity is going to be a concern. But if, let's say, that particular stock has a daily activity around 40, 50 lakhs, right? And you are just going to put in, let's say, 50,000 rupees or 1 lakh rupees, then is liquidity a problem? No. Okay. And hence, there is, of course, opportunity in this space. That is why there is, of course, there's so much research and analysis going on in this domain, right? People invest in small caps. And that brings me to the power of small caps. I want to give you an understanding of what have been the small caps in our country that have done good, so that you have some sort of semblance. Why do people invest in small caps, even though, as I said, it's riskier than your Nifty 50 companies, your large cap companies, right? Because these are small, these are more volatile. But still, why do people invest in it? Why should there be, ideally, a part of your portfolio which invests in small cap stocks, right? Okay. So let's look at that. Okay. For example, 10,000 invested in Symphony in 2001 would have given you a return of 2,53,000%, which is almost 2,530 times. Okay. Aisha Motors, 1,461 times. Bajaj Finance, over 1,200 times. Jyoti Raisins, over 1,800 times. Avanti Feeds, over 1,500 times. Astral Polytechnic, over 517 times, 70 times. Across, yes, over MRF can also be taken as an example across a much longer time format. Okay. But now, why am I showing you this? These numbers highlight the transformative potential of small cap investing. It's not just about picking stocks, but understanding the growth trajectory they might embark on. Okay? And does every small cap stock do this? No. As I said, they're risky, right? There may be business challenges. But the ones that do have the potential of giving multi-bagger returns. That is why people do their research in small caps. That is why they have a small percentage of their portfolio in small caps in the hope of building higher alpha over the long run. Okay? And finally, we will see one investor who capitalized on a similar opportunity with Titan, and I think whose story everybody knows. Any guesses? Absolutely correct. Somebody says RJ, Mr. Rakesh Jhunjhunwala, late Rakesh Jhunjhunwala. Unfortunately, he invested in Titan at 160 crore market cap, right? All of us, we know Titan now, but he invested when it was just a 160 crore company. To give you context, like since I'm sure all of lot of you don't follow the markets on a day-to-day basis, what is it started off 160 crore, right? What is the market cap of Titan? 3.72 lakh crore as of today. How many times has Titan grown by? Almost 2,300 times. Since Mr. Junjunwala started his investment in Titan, it still constantly, continues to be more than half of his portfolio, the major part of his portfolio till date. Of course, it is handled by in his wife's name at the moment. But so this is what. But does that mean that every company that Rakesh Jhunjhunwala had invested in gave similar returns? No, right? Each and every one of your investment picks won't be like this. You will do your thorough research in everything, but at the end of the day, if you are from a business background, you will know that at the end of the day, all these companies, what are they doing? They're doing businesses. Businesses can go well, businesses cannot go well. Some businesses can go well for 5 years, but then after that, when they become a little bigger, then they start having problems. Correct? So, but yes, if one company is able to turn it around, that can significantly boost the overall portfolio returns as well, single handedly. That is why people, invest in small cap stocks. Whenever these private equity, have you heard of private equity, for example? Now, these are private equity is like, let's say, think of it as mutual funds for institutions and high net worth individuals, right? What happens is, rather than listed companies, private equity look at private companies which are not listed in the market yet. Correct? And these are also small companies. And I have been fortunate enough to work in this. And when they invest their capital, right, they will, let's say, in a particular private equity fund, they might have around 20 holdings. And these are very, very smart people, very, very highly paid people, right? But they know that if they have 20 stocks, the the mindset is that, two, if even if two or three are winners, and all the, let's say, 17, 18 stocks end up being loss making, they will still be profitable. What happens is, because the companies are small, their investments are also relatively small, right? But if, let's say, two out of those 10 companies go on to become something like, let's say, I'm not sure whether I should be taking names, if there should be any conflict. But for example, any small company, right? Let's say somebody had invested in Chennai Super Kings. Chennai Super Kings has private equity investment. I don't think I should be taking names, but any which ways. So, but that would have been, 20x today. So that is what happens, right? So everything, they also know that everything might end up failing. Just even a couple of them click, they will more than make up for the losses for the remaining. And that is how they look at it from a total portfolio context. Okay. Shovik, what is private equity? Shovik is asking the questions later always. As I said, it is like mutual fund hedge funds, but they only invest in private companies, not ones which are listed in the market. Okay. And that brings me to something that Mr. Buffett say again. I think I could make you 50% a year on $1 million. No, I know I could do that. I guarantee it. Now, do you think Berkshire Hathaway makes 50% returns? Do you think so? Warren Buffett's company, right? Asset management company? No, right? But why did Warren Buffett, if his company does not make it, why did he say that I can make you 50% return on $1 million? Any guesses? He said he was so confident that he went on to say, I guarantee that. Because here, Berkshire Hathaway is sitting on on around $300 billion of cash. It's huge. It's very, very difficult to make that amount of that large scale of money mobile. But with a relatively insignificant amount, which is $1 million, he said that he has even more flexibility, and given his skill set, he can make 50%, right? And that is what we want to do. We are small investors. We are nothing compared to how much capital these retail, institutions have. But that is also a good thing and a bad thing, right? Good thing, in the sense that we do not have any structural limitations that are hindering us. As I said, we have advantages. The only thing is, if we do, let's say, the same type of analysis We do thorough research, we do proper analysis, find quality companies, understand the business model, and let's say we end up investing in them. We can also, do investing in small caps in a proper fashion. Okay? That brings me to the next question, and I think all of you will be having it, that, you know what, Rahul sir, how to identify good small cap stocks. That is something which we need to now understand, correct? If we at all, if anybody wants to do invest in small caps, first, very, very important, even more important than, let's say, large cap companies, is to understand if a business is good or not, correct? And that brings me to the 7-step golden checklist that I said that I'll be telling you. Golden rules of small cap investing. Okay? Now, the first important thing is you don't blindly go and look at stocks. Your job should be to find the correct sectors and then analyze the stocks in detail. Okay? Finding the correct sectors. What do I mean by sectors? Let's say, for example, banking is a sector. IT is a sector. Automotives is a sector. Pharmaceuticals is a sector. Hotels, hospitality is a sector. Correct? So these are all sectors. For example, if you did not know what sectors are, these are sectors. Now, in banking, I'm pretty sure you will all know that within banking, there are private banks, public banks. Within, let's say, in public bank, you will have SBI as the biggest. In private banks, you have HDFC, ICICI, Kotak, Axis, so on and so forth. So, what I'm saying is, you don't really look first, go and see, Acha, HDFC, yeah, Axis. That is not the first thing as an investor. You should always go from the top, right? And then come to the bottom. There should be a proper framework. And that is why we say that, you know, always look at the sectors first. Which sectors look promising? Which sectors, have good growth opportunity? Do your analysis on sectors first, then move on to stocks. Correct? Okay. And why something like a sector analysis should be done? For example, there was KPI Green, right? 2 lakhs invested in KPI Green had turned into 80 lakhs in 3 years. Correct? Green renewable energy sector. Correct? So that is why. Because renewable energy is growing. It has been the talk of the town for the last 5 years or so. 5 to 7 years. Government is taking measures. So the renewable energy space made a lot of sense. And yes, then within that one renewable energy space, there was one stock which gave very good returns historically. Somebody says, I have KPI. Perfect. Now, I think the next question is that, okay, we understand. I hope all of you understood that it needs to be a top down approach. You start from the top and then gradually you keep filtering your way down, researching your way down to the bottom, right? But then the next question is that how to identify such sectors and opportunities ourselves, right? And you know what? I'll tell you what professionally we do. It is called as the investing life cycle that we conduct professionally. This is what professionally, let's say a wealth manager, an investment bank, or any of these funds, right? They have their research and analysis team. And this is what how the research process looks end to end. First, they will try and identify industries, correct? Which are the industries that are looking good at the moment, okay? Based on their research. Then within that industry, they will go into more detail, try out what are the microeconomic conditions of that industry, what are the different stocks which are performing, which stock has competitive advantage, which stock is, let's say, the market maker or the price setter in that industry, which stock has is performing well, has good potential, which stock has you know not been performing well, does not have good potential. Does that make sense? Because, for example, which is one industry that is doing very well right now, it is AI. But, and there are so many AI technology companies, right? Just because AI as a sector or an industry or a theme is growing very rapidly, does that mean each and every AI company is going to grow? Each and every AI company is a good company? No, right? So, getting into detail within the industry is also very important. and then filtering out companies which are fundamentally sound and good. Then, if you filter out a few handful of companies, right, within a particular industry, do you go and invest in all of them? If you find, let's say, 20 good AI companies, will you go and invest in all of them? No, right? Then you will need to decide, you will need to pick, and that is wherein company comparison comes in, right? So you compare between those companies again via different metrics, and you decide, okay, these are a few good ones that are, let's say, as per your research, investable in. And at the end, do you think once after these professionals do all their analysis, they compare companies, identify, drill down on a few stocks, just simply go and buy that stock? Do you think that's how it works? Absolutely no. They will try and find the right price of a stock, what we call as intrinsic value. They will do a thorough research on that stock. They'll conduct their own valuation on a stock. For example, if a stock is, let's say, at 100 rupees, they will do their own mathematical frameworks, their own analysis and valuation, and try and identify what should be the price of this stock. If the price of this stock should be 120, what they'll do is, okay, price is now 100, will get in at 100, will try to go to 120. If they see that, you know what, price is at 100, but as per my valuation calculation, everything, price should be, 80 rupees, then even though the company was, looking good, will they go and invest in it? No. Of course, no, correct? Because they believe that the actual value of the company should be 80. It's trading at much higher. It does not make sense, correct? So, this is what the professional investing life cycle looks like end to end. Okay. Uh, I hope you understood this, but tell me something, how many of you can do it? How many of you can confidently analyze the markets yourself and build a strong portfolio? Let's say conduct this entire process end to end. I said it in a couple of minutes, but this industry identification, you have a macro team, you have a team of economists who are doing it all the time. That is the entire job, researching, researching, researching. Then you have them teams look at, this detail itself. Then you comparing companies. People think you can compare companies. If you open up Screener, you will, let's say, look at peer ratios. That is not what how company comparison looks like. I'm pretty sure 100% of you don't know how to compare companies the right way, and then let alone do your equity research valuation, right? So it's very difficult to properly do the process end to end, right? I used to do, let's say, three parts of the process. This, in my investment banking days, was not a part of my work. In private equity days, yes, we had to do a lot of industry analysis as well. Like it was a part of our scoping process. But anyways, it was my agenda to just tell you that you can't do it. It's a lot of hard work. No, because we will be using AI to see how we can leverage all of this. Okay, get all of this done with the help of AI. Correct? And our promise is by the end of today's workshop, you will be able to independently evaluate stocks and portfolios with clarity and confidence. I know that's a very tall promise. Do you think I'll be able to stand by my promise? Yes. So, without any further ado, let me tell you how we at SpringPad use AI to analyze industry trends and generate investment decisions. By the way, just want to tell you from here on, I want your complete focus because I'll be showing you steps, I'll be showing you a lot of things. Pay attention, you know, focus on what I'm saying and what I'm doing because you'll be getting all the notes, but try and keep up. Okay. What is the accuracy of SpringPad AI? There is no SpringPad AI. I'm teaching you AI framework so that you can leverage on your own, right? I think you're confusing it with Bullseye. I'll come to that later. Okay. Now, because we're using AI, we'll be using So this is a part of the first golden rule wherein I said that you should be able to analyze companies and do your sector analysis. And we are still in golden checklist number one. That is the biggest checklist, right? Okay. So you'll be using Grok, Perplexity, ChatGPT, Claude, different AI tools. As I said, different tools have different USPs, and we'll be using every tool based on the use case. Okay. For example, Grok, as I said, is great at doing multi-level analysis. Perplexity, hands down, better best at research. PhD grade research, it can get done for you. ChatGPT, very good at logical analysis. Claude, hands down the best when it comes to data analysis, uh, modeling, coding, so on and so forth. Okay. And as I said again, guys, yes, you will get notes for all 4 days of the FFA. I've already told you that. So pay attention. Okay. Now, tell me one thing. Can you realistically scan thousands of global trends to identify future growth opportunities in sectors manually? There are teams of economists who do this around the year. It's very difficult to get all the data point, but we don't need to worry because we have Perplexity, which is hands down the best AI tool when it comes to doing deep research work. Okay, let's see how we can use Perplexity. So, of course, where there's a AI, there is a prompt. So we have just a second SpringPad's growth sector deep research prompt. Okay, all that you need to do, free version, absolutely yes. Copy the entire prompt. What is the prompt on? To identify and research on growing sectors. Okay, so we go to Perplexity and we paste the entire prompt. Okay, copy it, paste it. Make sure that the deep research mode is enabled. In the globe icon, again, this will be there in your notes as well. Okay, in the globe icon, click, make sure web search is on, social is on, and academic is on. Okay, after that, hit enter. Now, this will take a couple of minutes. So, I've already run the analysis for you. Okay, so this is the same a prompt. Okay, what it gives me: economic renaissance, navigating growth opportunities in 25-26. Okay, now on your screen, do you see 5 industries? On your screen, do you see 5 industries? Yes. So it has gone through all the literature out there and then come up with these 5 industries. Isn't that amazing? That based on macroeconomic research and everything, these industries look have very high probability of growth. Like they look to be in a good place. Renewable energy, electronics manufacturing, pharmaceuticals, fintech, infrastructure. Amazing. And by the way, look at it. Everything is backed by data. Each and every one of these data point, like I said, a PhD grade research report is right. Every in a PhD report, you will see that every data has citations or links or references. Where did you get this data from? Over here, it is there as well. Not one, but multiple resources. Okay? Renewable energy, electronics manufacturing, pharmaceuticals, fintech, and infrastructure. By the way, how many of you will be convinced by this? It's just naming 5. How many of you won't? I personally, I would be amazed at what it is doing, but because I like to read and analyze a lot, I would want a little more information. Correct? Need more info. Correct? Okay. And that is exactly what it does for you. It does a thorough macroeconomic analysis for you. What are the current macroeconomic indicators in our country in terms of, let's say, growth rate, GDP expansion, real gross value added, inflation? It discusses monetary policy, what are the major international monetary policies and in intervention structurally, what is happening, what is India's demographic profile, what is happening in terms of demography, right? What is happening in terms of capital, what is happening in terms of infrastructure, what is happening in terms of the prospective infrastructure pipeline in the country, reforms across taxation, investment, ease of doing business, whatever is happening. uh, on the investment fund, they look, it gives you FDI research. Not just that, not just within India, it will look at the global context also. What are happening in terms of imports, export, what is happening in terms of trade deficit, currency analysis, right? Currency markets. It will look at geopolitical scenario, and it will look at all of this. And based on all this, you can see, right, everything is data backed, everything has references and sources, you can cross check it. Based on all this detailed set of analysis, that is making that as the base, they are saying that, you know what, based on whatever that is happening, these five seem to be in a position to benefit the most. Now does it make sense? Now does it make sense? And not just that, for each and every one of these five, right? Renewable energy, okay? It gives you a detail as to what is happening in the renewable energy space, who are the key players, what is happening, what are the subsidies government are giving, what are the projections of this business altogether. Total renewable installed capacity 251 gigawatts by October 25. And what are we aiming at? 501, 509 gigawatts, right? What is the planned capacity? What is the targeted capacity? Who are the prominent players? What are the schemes that are going on? What is the impetus from the government that is going on? Makes sense? Not just for that, same thing. By the way, where it go? Same thing for electronics and manufacturing. Same things for pharmaceutical. Same thing for fintech and digital payments. Same thing for infrastructure. So there's so much data. And why do we use AI? Do we use AI to tell us where to invest in? No. We use AI to be able to do heavy lifting. This report, it would have taken any professional team, right? At least 3 4 weeks to come down to go through all the data, read so many research reports, and combine this information in a one place and make sense of it. But thanks to the computing power of AI, and it has become so sophisticated, we can use it to do a research for us. Whatever have we seen? And you know what? Not just that. Let me tell you what. It discusses policy as well. What are the current regulations? What are the future regulations like PLI schemes, tax incentives? What is happening from a legislative pipeline? Investment treaties, so that it will help in your import export and everything. What is happening in terms of infrastructure, all of that, right? It discusses, and then it gives you a small summary table for all these five industries as well. What is the current market size, kager, global share, major FDI policy, and everything, and it gives you a simple conclusion as well. Is this powerful? Can I have a P in the chat if you think that this is really, really powerful? You know how many sources it went through? Just a second. I think it goes through some 255 sources it has identified, right? And then condensed 255 articles. Yes, research paper, articles, everything, consultation papers, everything. And you can verify each and every data point over here as well, right? That's the beauty of it. So, tell me something. Can you identify the next big sectors yourself, rather publish your own research report with the help of this prompt? Yes, I'll be sharing all the prompts at like we have been doing at the end of the session today. Okay. So, have we been able to tackle the first step? Very, very complicated, very, very time consuming, requires a lot of knowledge and practice, but we have been able to do it with the help of AI. Can I have a one in the chat? One, one, one. Perfect. Now, perfect, perfect. Tell me something. Can we analyze any industry and identify strong stocks from the weak ones? Is that something all of us are, educated or practiced enough to be able to do correctly? No, right? No. It will take you, professional learning, professional experience. But again, we can use AI to do a lot of that research work ourselves. For this, we'll be using Chat GPT. Okay. And let me take you to Chat GPT. So this is a custom GPT that we have built. SpringPad's Industry Analysis and Stock Selector GPT. Make sure that you use the latest model, by the way. And yes, you can use all the free versions of these tools, right? They give you all the free premium features in the free version as well, but they'll give you some usage limitations. So all of you can go for the free versions, okay? Right? Now, if I want to use this, how do I use it? For example, let's say we want to, go into a little bit of detail on any particular industry. Okay? So, for example, by the way, Perplexity, I think it was Airtel, right? Who was giving Perplexity for free. Yes, Airtel users. So, yeah. Okay. Let's do one thing. Let's take renewable energy. Okay. And let's say we want to go into detail on this industry, identify what is good, what is not good. Okay. Do I have your attention, guys? Because you snooze, you lose. And right, almost 2,500, 2,600 people of you, I won't be able to go back. As I said, I have a lot to cover today. So please, okay. So what do you need to do? Let's say renewable energy. All you need to do whenever you want to analyze any industry under the sun, just type in the name of the industry. So for example, if I type in renewable energy industry, this has been trained to do a certain, multi-step approach in terms of analyzing an industry in a top-down manner and then looking at it at a stock level. So that is why we have not, built it into a prompt. We have trained this for a long time, perfected it, and now we're sharing it with you. No prompt is not required because this is a custom GPT. Make sure you have the thinking mode on, hit enter. Now again, this will take time. So let me show it to you. Okay. So again, as you can see, I just put in the same thing, Indian renewable energy industry. Okay. So comprehensive top-down Indian renewable energy industry analysis. On your screen, if you like to stick to the point, do you get this custom GPT for free? Absolutely yes. On your screen, do you see three names? It has gone down, done the analysis and identified the, you know, best three stocks in terms of quality. Okay. What are they? Tata Power, JSW, IRDA. And it is, there's a saying, right? Keep your friends close, keep your enemies closer. What is the logic behind that saying? You should know what you should not do. Okay. At the moment, the weak stocks in this industry are Borosil, Orient, and Ojas Energy. Is this good? Yes. Is this something which is helpful? You type in an industry name and it filters down the top three and the bottom three within that particular industry for you. Awesome. Mind blowing. Yes. It gives you a quadrant analysis of the top, biggest 20 stocks in the sector. Okay. Again, if it says strong buy, Tata Power, JSW, IRDA, does it mean that we go and buy Tata Power, JSW, IRDA? No. Are we using AI for investment decision making? No. We are using AI to do smarter analysis. And that is where I want you to go, right? Macroeconomic and market environment. It discusses all the growth rates, inflation, and everything with the context of this renewable energy industry itself. Goes into the industry by renewable energy. What are the metrics that we will look at? Okay. How to use custom GPT? We'll share the custom GPT link It'll open in your own chat GPT and you'll be able to use it. Guys, these are basic questions. I think you can Google this as well. I saw a question that somebody, sir, can you go back and you revise doubt solve? We have so much to cover. Is it practically possible for me to answer 2600 people's doubts in a webinar? So you have to understand that as well, right? Even if I want to, I will not be able. If I have to take one question from 2600 people, I will be sitting here for at least 2 days consecutively. So, okay. Again, as I said, we'll be sharing all the notes. They are detailed so that you don't have to, you will not be forgetting anything. We'll be sharing it with you. Okay. In-depth industry analysis. So we'll be looking at installed base because that is the metric that we look at, correct? Regulatory landscape, what is happening? Technology, demand and pricing, supply chain, what is happening? What are the sector specific challenges? What is the competitive dynamics within the industry? Very, very important to know who is the market maker, who is the price setter in a particular domain. Is everybody a price taker? Does somebody have has pricing power and then all the other companies within that industry follow? All these things are very, very important to analyze in the business. It does all that, and then based on it, it comes up with three stocks. Okay. Tata Power, it tells you why, what are the financials, what are the catalysts, what are the risks. Okay. B, JSW Energy, C, IRDA. Same. Why, financials, catalyst, risks. Also tells you why are these three stocks the weakest at the moment. Loss making, overpriced, poor growth, weak returns for Orient, Ojas, tiny scale, working capital stress, right? What is this? It gives you a strategic conclusion, it gives you a quadrant analysis. Do you think having the power, there are so many sectors, right? There are so many sectors, there are so many subsectors, okay? You can go to 30, 40, 50 just within India, right? Do you think it's really, really powerful that you can just type in the name and you get a complete overview of what is happening in the industry and which are the, fundamentally looking at it, which are the best three stocks at the moment? Perfect. Yes. Can I have an MB in the chat if you think having the power in just under a minute to be an sort of expert on any particular industry is a skill that all of you would like to have? Like this is expert level research, right? To be able to do it in under a minute. Yes. But the most important thing is you just don't see, acha, Tata Power, JSW Energy, IITA, you move on. No, that will not help understanding. You need to leverage AI to make yourself smarter, correct? So go through whatever it is being discussed, you'll understand, and then you'll be able to make your decisions, right? You'll have conviction, correct? MB? Okay. So again, quick question. Now, can you identify high quality knowledge on any industry in under a minute? You have your very own AI tool for that, which is SpringPad's custom GPT, which we'll be sharing with you, right? Have you been able to solve step two, industry analysis and stock ideas? Can I have a two in the chat? All thanks to AI. Yes, perfect. Now, this is where I think we take it a step higher. And before I do that, I want to ask you a question. How accurately can you compare multiple stocks and identify the perfect stock? How confidently can you compare stocks? For example, right? I tell you, let's say I want to compare between HDFC, Axis, and SBI. I'm specifically saying this 70%, 50%, more than 90% accuracy, 10 on 10, I'll be able to do it. People are naming HDFC, some are saying SBI, some are saying Axis. Why? So I'll tell you what, okay? There are people who are being, conservative, honest, that I don't know how to compare companies. There are people, all of you who are saying, let me tell you, and you tell me whether this is the framework that you're operating on, right? You will open up Screener, you will look at PE ratio, correct? You will look at EPS growth, and you will look at the comparing companies section in Screener, right? You will look at this: lowest P ratio, highest growth, best. Huh? Correct? Sales to market cap, EV to EBITDA, all that. Okay? ROE, ROC. There are other people who will say, you know what? I'm smarter than that. I will open up TradingView and I'll look at the price of the chart also. I'll look at the technical analysis. Yes? Is there anybody who is doing more than this? CASA ratio. Okay? Again, it falls under looking at screener, right? No. So tell me something. There is a sixth sense movement, right? As I said, you will open up trading view, RSI, MACD, PEG ratio, capital employed. Same thing, right? I'm telling you something. Most of you said HDFC. Do you know why? Because HDFC is the biggest stock, correct? In this space. HDFC has more spoken. That is HDFC hoga. That is the sort of analysis. Biggest bank HDFC. HDFC hona chahiye. So why am I telling you this is, yes, we are doing the right stuffs. Should you look at screener? Absolutely yes. Should you look at technicals? Absolutely yes. But is that the only way you should look at it? Absolutely no. For example, let me give you, and this is exactly what I'm telling you. I'm pretty sure 100% of you don't know how to go about perfectly comparing companies. And it's not a problem, right? You won't find it out there on YouTube also. And I have seen this in private equity, same framework that we use. I've seen in my asset management days, I've seen it in my investment banking days. Same framework these institutions use. It is what we call as a scoring matrix. And you know what? I'll come to scoring matrix. Do you get influenced by what people are saying about a particular stock? And do you think that affects your decision making while comparing companies? You will, and that decision making will say, अंदर से feeling आ रहा है, gut feeling आ रहा है, right? You because and it's subconscious, right? You hear in the news somebody talking about a stock day in and day night. Everybody is talking about a particular stock. Let's say, even if you are thinking of on this 3 months later, you will have a recall. You will have a subconscious bias, right? You will have a confirmation bias or a recall bias, whatever. Most of us, we are doing one dimensional analysis, two-dimensional analysis at best. We have subjectivity in this as well, and subjectivity in the sense of bias, not good subjectivity. Do you think being emotional and not data backed is the correct way to go about identifying an opportunity? No, right? How do professionals do it? Like you can just give them all the data on these three companies and name the companies and ABC. It won't matter to them. They'll be able to do independent analysis. You have to do what we call as multi-dimensional analysis, and that is and to do it in a data backed, emotionless, objective manner is what we used to call as a scoring matrix. Now tell me something. For example, if in a classroom, right? I tell you that, you know what, guys, identify the best three students for me. Or no, for example, tell me who is the best student in a classroom. What will you do? You will conduct tests, right? You will conduct exams, you will conduct tests. Will you conduct only a maths exam? Or let's say only an English exam or only a physics exam? No, because if you only conduct a maths exam, you are finding the best math student for me. If you're conducting a physics exam, you're finding the best physics student for me. And that is what I'm saying, guys. When people do technical analysis to identify investment opportunities, they are finding the best technical opportunity. When people are doing just fun, looking at financials and valuations, they're finding the best, or the strongest financial stock. When they're looking at the business insights and everything, how is the business operating on a qualitative aspect, they are looking at what? Only the best fundamental company, correct? So, but what was my question? And that is what majority of you are doing, right? And it good that you are at least doing that. But what was my question? To find me the best student. So you will find, you will take score, calculate all the total across all the subjects. Whoever has the highest sum total across all subjects is the best student. Can we say that is an objective way and a data backed way to find out the best student in a classroom? Yes, and that is exactly what we try and do. We call it the scoring matrix analysis. We will take we take the stocks, we look at it from multiple different angles, right? It can be technicals, it can be financials, it can be fundamentals, it can be valuation, multiple different angles, and then holistically we try and determine which is, which has the best quality of the lot. Okay, and to do this, exactly this, I'll be showing you how to do scoring matrix analysis using Grok. And believe me, it was only recently that I have been able to do this, because it is a very complicated, lengthy analysis, because a lot of analysis is happening parallelly. Correct. Earlier, AI was, I was not able to do it with AI. Only recently, AI has been, because AI is evolving day to day, it is becoming so sophisticated that now it can do complex logical analysis, do something like a scoring matrix analysis as well. So, yep, very excited to share this with you. So we'll be using Grok. Grok, if you don't know, is another AI tool. It is Elon Musk or XAI or Twitter, as you know, their AI model, right? Very good at doing multi-level analysis, like the case in point we have. So, for example, this is a prompt that we are going to use to do our company comparison deep research prompt. Okay. So it's a 14-page prompt, because I have detailed all the steps that go into doing a scoring matrix analysis. I have given it a proper breakdown step by step of what sort of analysis to do, what steps to take. 14-page, yes. All you need to do is copy this, okay? And we'll try and enter the names of the stocks. By the way, we have all heard of apples to apples comparison, right? Never do apples to oranges. And what does it mean? That whenever you're comparing, always make sure that the industries or the stocks are in the same industry. Okay? Because the baseline metrics for one particular industry will be very different to the baseline metrics of another particular industry. So over here, let's say, for example, let's build on this only. Okay? We had Tata Power, JSW, IRDA. All are in the renewable industry. Okay? So over here, after you copy paste it, just enter the name of the three stocks. Okay? Tata Power. So as of now, I have seen that it works up till three stocks. It works absolutely fine. Sometimes it will give you the result for 4 5 stocks. Sometimes it gets stuck. Maybe with time it will be able to do, the more AI evolves, it will be able to do even more. But at the time, I would suggest stick to comparing three stocks at a time within the same industry. I have tried it multiple times. It does not have any issue whatsoever. Okay? IREDA. Enter your name also, just to be fancy, because it's a complicated analysis, so that you can show off to your friends that देखो मैंने ये research खुद किया है. So make sure that the thinking mode is on. Okay, expert thinking mode is on. Hit enter. This will take around 5 minutes time. Five, 14-page prompt will I share? Of course, yes, guys. Okay. 14 page, 1 page, everything that I'm showing you, I will share. Definitely. Otherwise, what is the point of me showing this to you? Okay. Just a second. Okay. So here was the prompt. And then here it gave me the analysis. Just a second, guys. It's a lengthy prompt. Over here, can you see something like a mark sheet for three students? Student number one, Tata Power. Student number two, JSW Energy. Student number three, IRDA. Every subject has a score of 5. There are 6 subjects in all. So total score 5 into 6, 30. What are the subjects? fundamental analysis, financial analysis, company performance, outlook, technical analysis, valuation. Okay. So again, I have seen that if you use the faster models, correct, it will give you, it will beautify the analysis for you, but the analysis is not that good. So over here, right, you'll see it has, it did not make a table, but that's fine. It gave me all the data. For every subject, do I have a scoring out of 5 for all three students? Yes. Can you tell me which looks, across all dimensions, which looks to be the strongest at the moment, or the has the most quality? Tata Power. Tell me something. Is it data backed, objective, emotionless, free of guesswork, and also multidimensional? Yes. This is second, guys. Uh, But what did I say? We will not use AI to do the work for us, right? Okay, great. But let's look at the wonderful research. This is where the magic happens, right? Fundamental analysis, each and every subject is explained for all three students. Fundamental analysis, subject number one, Tata Power, whatever is happening. JSW Energy, what are the core businesses? What are the recent developments? What are the company sentiments, on the market? IRDA, again, same thing. Okay? Based on this, even if you're new to the markets, is my voice not clear? It's clear now. Because on day one also I was using my earphones only. Clear? All good? Okay. So as I said, uh, let me continue to use this. Okay? Let me continue to use this because there's somebody who thinks that using a hammer is the right time right now. So I can't help with that. I think this is better. Okay? Now, as I said, subject number one, and the beauty of it is, correct? Beauty of it is, even if you're new, this analyzes everything in simple English, right? That is what we want. Financial analysis, all the important metrics that we look at, right? Let's say from an income statement, balance sheet, cash flow statement from for point of view, across statements, debt to equity, revenue growth, it takes into consideration all of that, and then it tells you what is happening in each and every stock, simplifies it for you so that you don't have to look at all the data. Company performance. This is very, very important. Okay. Stock price performance. How is Tata Power performing? How is JSW performing? How is IRDA performing? Okay. Then relative to historical performance, how is it performing compared to how it had been performing? Right? Was it doing good earlier, but now it is not doing any good? Okay. Relative to industry benchmark, what is the average in the benchmark? What is happening in the industry? Is it outperforming or is it underperforming the industry? Okay. Related to management's forecast, very, very important. Okay. Very important to see if management can predict or give, you know, legitimate guidance on their business. Correct? If you see that management made a prediction, made a forecast, and the company usually has a track record of meeting those forecasts, it's a good sign so that you can rely on management's guidances for the future as well. Very, very important. Performance as an investment vehicle, it discusses that. Fourth subject, outlook. What are the growth projection, opportunities, management's forecast, macroeconomic and regulatory conditions, and potential risks for all three stocks? Okay. Technical analysis, fifth subject, all of you who are doing, it does your technical analysis for you as well. Tata Power, JSW, IRDA does your technical analysis, tells you what is happening in simple English. Those of you looking at valuation, okay, we look at the PE ratio, PB ratio, EV EBITDA ratio, all of that we are taking a look at, comparing, and then in simple English,
determining what is happening. Okay. Now, does it make sense? See, if you only look at this, you will not understand what is happening. But now that you go through each and every dimension, each and every line of analysis for all these stocks, these numbers, you know, they will also start making sense. Of course, these numbers are for your reference, right? There is no way, right? Nowhere there is written that fundamental analysis, startup power will score 5 on 5. But this is indicative, right? You'll be able to understand what is happening. Okay, so Tata Power is scoring 5 on 5, JSW 4 on 5, IRDA 3 on 5. What is happening? You will see the comparison, you will see the report, okay, this analysis. And this, I believe, is really, really, really a game changer, right? Being able to do this sort of analysis and making it, a data backed opinion rather than guesswork is really something I believe which is game changing. Can I have a GC in the chat if you think this is game changing as well? Yes, GC. Perfect. Now tell me something. Can you confidently, unbiasedly, and independently compare companies in depth, backed by data and analysis? Can I have a three in the chat if we have been able to do it like professionals? I'm pretty sure none of you knew what a scoring matrix is, but now you're able to do a scoring matrix also with the help of AI. Yes, perfect. Now, which leaves me to another question. Can you confidently tell if you are investing at the right price? Let's say you look at any stock. Can you confidently tell that yes, this is a good price to enter at or not to enter at? What did I say? What was the last step? You, let's say, identified Tata Power. Okay. Let's assume for a second that, you know what, we have done our research and analysis, we have leveraged AI, and let's say, assume I want to go for Tata Power. Okay. Should I go and invest in Tata Power right now without looking at the price or anything? No, right? What is the next step that you as an investor should always do is do a thorough analysis of any company, right? Thorough analysis and valuation of any particular company to understand whether the price is right or not. Okay. How do you do that? Of course, we don't know. Building equity research models, it's 70, 80 page Excel reports that we build, 80 sheets, right? In one workbook. It takes, for the first time, it takes a month at least to build it. And then it takes around 3, 4 days to keep on updating it, right? It's a very tedious task. But let's see how we can simplify it with the help of Claude. Okay. Before I take you, what do I mean by equity research report? Let me show you that. Have you seen reports like this? This is what we call as analyst coverage reports or brokerage reports, right? These are basically research analysts who are, best of the best. Their job is to do this research. Remember in day one, I showed you the prompt to pull all the analyst coverages on a particular stock and put it in a probabilistic view for you. See, these are all the analysts that I was talking about. Okay. So there are many, many, many analysts, right? You will have ICICI Direct, you have Motilal Oswal, you have Keynote, you have JM Financial, SBI Securities, HDFC Securities, so on and so forth. Okay. Now, so this is ICICI Direct's thing for Max Estates, right? They over here, I want you to zoom in. By the way, these reports look very difficult. It's full of charts and numbers, very little analysis. If you are somebody who's new, you will have a tough time understanding what the text is because it is very, uh, formal, and I would say, how to put it. This is professional lingo that is there over here. Now, okay. Now, for example, this says, where is it? Yeah. So it tells whether it's as per their analysis, it is a buy, sell, or hold. It tells, so this is basically after the recent results on November 6, 2025. They say that they expect Max Estates to go to 640. Guys, if you want to take a water break, just go and take it, right? Okay. Uh, it gives you a price target, 33% up move. They give you a potential target, uh, you know, potential as well. And they give you a time period. Now, is this something which we think is going to be very helpful? Having these basically North Stars or metrics, it can give you some sort of guidance. But the real question is, what sort of analysis do you need to do to get to this, right? For example, this is another, let's say, this is keynotes, right? Keynotes on Lemon Tree Hotels. So for Lemon Tree Hotels, keynote said that they gave a buy rating. They gave a target of 220, which was a 42% upside as of the report issue date. Now, that is, if we are able to do something similar to this, right? Analyze on the similar lines, that would be really, really beneficial. And that is what we would ideally want to do. So I come to Claude. Okay. Just a second. I'll go to a new chat. Good afternoon. Yes. I'll go to my prompt. Okay. I have another prompt, SpringPad's comprehensive stock analysis prompt. Okay. I'll copy the entire prompt. Again, this is also a 14-page prompt. Coincidentally, I'll paste it. Okay, just a second. I'll paste it, and you need to enter two things over here. If you look at the prompt, you will see that I have added a space to enter the name of the stock that you want to analyze. But because it's a big prompt, it gets pasted as an attachment. So somebody says, why not 15? As I said, coincidence. Stock name is, let's say, Tata Power. Okay, and author, I want to be fancy. Let's say Rahul Chandra, you can put in your name when you do it. If you want a little more explanation, okay. If you want a little more explanation, make sure the web search is on, and also use style may go and type, put in explanatory. Otherwise, normal will function as just as well. Hit enter. Now this will take around 4 to 5 minutes. Okay. And I have already run this for you. Okay. Just a second. Where did my chat go? Okay. I think the chat went missing, but I had just run this for you. This is the sort of analysis that is able to generate. Okay. Can you see the report? Wait, guys, I think this is the incorrect one. Just a second. Just a second, guys. Let me refresh Claude. Yeah, here we are. See? Uh, just a second. This should have. Let me refresh it again. Please reply. Recording? No, no, guys. Can't get recording. Okay, let's see if it gives us the analysis. Is this. No, this is a different thing. Just wait. Let me see if I have the report ready. Otherwise, we'll be able to get the report in some time itself. Okay, you know what? Let me run it as well. Let me run it afresh. Okay? Let's go here. Let's. कोई बात नहीं. It'll take us 5 more minutes. ठीक है? कोई बात नहीं. Let me do a fresh chat. Again. I think Claude is facing some issue or what? I faced this yesterday as well. It was working fine, before today's session. Yeah. Okay. Let's see. Let's see what it does. So first and foremost, let's okay. While it's doing its analysis, so it pulls all the financials for from Screener, right? So over here, if I let's say put in Tata Power, so I have fed in my prompt. If I show you over here, I have fed that only take financial statements from official sources and Screener, right? So if I go to again, it's yeah. If I go here, correct, you see the quarterly results, you see the profit and loss, you see the balance sheet, and you see the cash flow, correct? So we need all of this data to do this analysis for us, correct? We to do a financial analysis, we all need all these data points. So it will directly pull it from Screener. Like you can see, pulling all the see over here, pulling it from Screener, all the results. It's pulling from Screener, and also it will go and look at other places. It will also go and look into the company's website to pull the financial results. Okay. Then it gets coding based on what I have said. And by the way, this gives you the output in an HTML format. How many of you from the tech background, like because it is in a HTML format, like properly edited, if you run a microblogging site, or let's say if you want to save it as a properly edited PDF, you can also do it. Very, very simple. It'll generate it. You just need to download it. Okay. 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 Is is this the one that is now showing? I'm scared to run mess around with it in case it stops working. Let me try it on another window. Because it takes time, guys. It takes time. See, it's not showing the result over here. That's the problem. It I had run this before the workshop. No worries. Let's wait. Not a problem. Okay. Let's wait for the analysis to kick in. By the way, what is the objective? What is the objective? Can somebody tell me what is the breakdown of, let's say, a proper research? Is it only to understand the price? Yes, that is what we try to understand if the price is justified or not. But is it only the price? Let's look at these reports, right? Let's look at these reports. What are they doing over here? They could have ended the report in this small space itself, right? Current price target period is 12 months. खत्म हो जाता है इधर ही report. But why? You need to understand what is happening. What has changed in the current quarter based on the results, the quarterly performance? What is the investment rationale? Because they have given a buy rating, what is the rationale for that? Right? So it discusses all the metrics that have gone well. Annualized rental income of 700 crore over the next 5 years, rating and target. So this is important. What has gone well? What did they learn from the recent earnings calls? They did all the mathematical calculation, con call analysis, correct? They did all the calculation on the, let's say, income statement, balance sheet, cash flow statement, build all the ratios, dissected their business. Okay? Do you think when it is talking about rental income, right? When it's talking about rental income, all these ratios, it's independently for the hospitality space, correct? It's independently for the hospitality space. If you're looking at all these, you will understand, right? Increase employee and other expenses affect operating profit margin. Then this sort of analysis is only restricted to hospitality. What is the rental model annuity portfolio, right? What is the pre-sales booking value? All of this are very, very important metrics. And this is how a proper deep dive in a particular sector. looks like. We want to be able to do something like this. But how many of you can go through this report, make sense of all the numbers, and comprehend this language? It's difficult if you're doing it afresh. Same goes for here, right? If I go to the keynote one, basically what Lemon Tree Hotel has done, everything, it will look at that. Okay? Rapidly expanding managed contracts pipeline, renovating nearing completion, Aurika Mumbai prioritizing strong performance and ARR, all of this, but it might be a lot. What do you make of this? If you have not done financial analysis, what do you make of this, right? What do you make of again the conference call with management? All of that very very important, but this language can be complicated, and that is what we are trying to figure out in this. So it's still doing the analysis. Okay. Fun question. By the way, a lot of you were asking that, sir, why are we doing this in Claude and not in Grok? And why are we doing the Grok one in Grok and not in Claude? All of you have this question. I think it's something everybody is asking. Yes, because see, I have done my testing. So, for example, if I pick out three of you, if I pick out, let's say, if I'm comparing between Pratik and I, okay. So Pratik will be good at a few things. I might be good at a few things. Pratik is very good at getting work done. I am very good at doing work. I might take more time, but I'm better at doing it into more detail. So does that mean either I am better than Pratik or Pratik is better than me? No, correct. But each have their uniqueness. So Claude, when it comes to this sort of coding work and everything, right? Data analysis, number crunching, Claude is very good, right? If you want to do research, Perplexity is the best for that. So depending on the use case, we are using these AI tools. So good, it has done the analysis for me. Okay. By the way, as I was saying, this is an HTML view, right? You can simply download, okay, and you can open. See, so over here it gives you a okay. We waited a long time for this. It's worth the wait. Are you ready? I first want you to show your excitement. This is also something which is very, very surprising that we can do with AI, right? Ready? So, it even if you don't know what Tata Power does, it tells you all about Tata Power. If you read this, you even if you had no knowledge of what Tata Power does, you will have better knowledge than 99% other people, right? What Tata Power does. It gives you a recommendation styled format like this and this of its analysis. Again, these are indicative, right? Does that mean that Tata Power will go to 480 only? No, but these are very good indications. What you need to understand is what is the logic behind this? What is the framework behind this? And that is where the real magic happens. Quantitative analysis, right? Market valuation and price metrics. Look at this. You don't have to do any number crunching. It does that. It tells you what the trend is. In simple English, breaks it down for you and tells you what you as an analyst should make of this data. That also it does for you. Profitability and returns, again, does all the number crunching, does all the trend analysis, not just for 1 year, for 3 or for 5 years, and tells you what is happening. Again, gives you in simple English the trend and what you should make of it as an analyst. Growth, same. Revenue growth, earning per share. Balance sheet, same. Debt to equity, trend analysis, it does for you. Cash flow, same. Does a trend analysis and key takeaway for you. See, over here, it is telling you also what is happening year on year. Dividend, yes. Efficiency, that means cash conversion, debtor days, working capital management, all are improving. Explains in simple English what is happening and what you should make of it as a new analyst. Okay. Now, valuation, qualitative peer comparison. Does a peer comparison, all of you, as I said, you do this peer comparison, right? You open up screener and do your peer comparison. It does that into much more detail for you. breaks it down into what is happening. Okay. Then, as I said, it is not only about number crunching, you need to understand the business. You need to qualitatively understand a company's operations as well. So it does a qualitative analysis, breaks down the business model, what are the core products and services, how does startup power make money, power generation. Within that, we have renewable, thermal, hydroelectric. Then it has transmission, which is 62% of its revenues. Okay. It has solar manufacturing, EV charging infrastructure. These are the different revenue streams. How many of you knew that these are the exact revenue streams? As I said, if you just go through the output that AI is giving you, the amount of knowledge, curated knowledge that you are able to get is absolutely, absolutely mind blowing. It's immense, correct? Discusses the revenue mix. We call it the revenue mix, right? Very, very important for us to look at the revenue mix and how it is changing quarter on quarter, right? What are the competitive advantages Tata Power has? It has the advantage of vertical integration, renewable energy leadership, manufacturing capabilities, strong brand and trust, financial strength, access to capital, strategic infrastructure. Discusses all these points that a proper analyst, two analysts speaking will discuss between them, right? The qualitative aspects also, not only everything that you see in an Excel. Okay. Then it discusses management also, because at the end of the day, these are the people running the industry, running the company. Very important to, you know, make see what the management is like. Discusses that. What are the corporate governance practices? What is the company's growth strategy, expansion plan? Okay, renewable energy scaling, solar manufacturing, energy storage solution, EV charging network, digital transformation, geographic expansion. What are the research and development initiatives? Will the company keep on innovating and adapting to technology? So, what is it doing in R&D? Discusses that. Who are the shareholders? What is the shareholding pattern? Has it changed? And if you don't know why is it important, it explains. It analyzes the total shareholding and the change in shareholding over time. This tells you a lot of what institutional or retail ownership is happening, right? What is the sentiment? By just looking at shareholding, you can understand that. Then it gives you an investment thesis. Okay, what is happening, right? Why is it in a good position? Why can it be a potentially good investment opportunity? So it gives out its own research for that. Then discusses catalysts for medium term, short term, long term. How is it positioned within the energy industry? Discusses that as well. What is plus points? What are its weak points? And then very, very important, how did it come to that valuation? It does a sum of the parts valuation. Like it breaks down Tata Power into different business lines, values each and every business line separately, and adds them up. This is one of the more sophisticated methods, or I would say the more intricate methods of doing a valuation. So it is able to do an SOTP valuation as well, values the renewable energy business, values the transmission business, values the thermal business, okay, values the solar manufacturing business, other businesses like EV charging, hydro, pump storage, EPC, reduces net debt, does a conservative base case and an optimistic case scenario, and then gives you an average. And believe me, the sort of framework is really, really mind blowing. This is exactly how professionally it should have been done, right? Do an SOTP, put a different multiplier, see what is the growth rate of each business line, and then value that business line separately, because each and every part of your business will not have the same growth, correct? Logically think, if I'm doing so many parts in my business, each of them will not have the same growth. Each of them should not be valued the same way. So values them separately. And of course, we have toggle cases, right? If any of you who have worked in equity research, you will know we have a base case, conservative case, optimistic case. Does that, and then gives you an approximation of how it came about this analysis. See, this figure is not important. Don't go by this. Okay. This don't go by this. But how it has been achieved, if you just go through this report, you will be so knowledgeable and you'll be able to break down the business, right? Understood? I think this is supremely powerful. You know, I think equity research analysts like me are going to have a run for their money very soon. If AI can do all of this right now, I don't know what it will be doing in the next 1 year or so. Okay. Can I have an MB in the chat? If you loved this analysis, now can you make informed independent stock analysis on the price of a stock on your own? You can be your very own equity research specialist. You can do your own analysis with the help of this prompt. Yes. Have you been able to solve step 4 using AI? Yes. Well, what about mutual funds and AI? None of you asked me this question. Yes, small caps investing mutual funds का क्या है? Well, let me tell you something. The correct mutual funds tailored to your goals, right, can help one track, monitor, and stay disciplined with goal-based investing journeys. Have you heard about goal-based investing? So mutual funds can be really helpful in goal-based investing. We will be seeing later in the workshop how you can use AI in mutual funds as well. Happy? Yes? Okay. Now that I have shown you the entire professional framework, tell me something. Are you confident in your ability to independently evaluate and build investment portfolio using a structured approach thanks to AI? Again, I'll repeat. AI is there to help you with your analysis, to help you with the work, to help you do the heavy lifting. But with all these steps, do you feel more confident? Yes, yes. Perfect. Drop in the biggest yes in the chat, guys. Okay. So, all right, guys. So that was basically our first golden rule of the 7 step framework. Don't worry, the other rules are not that long. But the first golden rule was to go end to end about your research from sectors right to stock analysis. That was the first golden rule. It goes irrespective of whether you're doing it on small cap, mid cap, large cap. I know we started off with small cap, but you can do the same thing across all categories. The second thing that I want to tell you is, you know, always have the I am a owner of the company mindset. Why do I say that? Any guesses? Tell me. This is a second learning that I want to give you. Now, for example, if you're not confident of putting your entire net worth based on your research on a particular company, don't invest in it. For example, if you're confident, right, should you put your entire money in one particular stock? No. We have learned the importance of diversification. But if somebody put a gun to your head and asked you to do research, right, and said, no, you can only invest in one stock, you should be so confident in your research that you are okay to put all your money in one stock. If you are not confident, right, if you don't want to do it, that means you're not confident enough in your research, right? And having this mentality that agar mere paas paisa hota, like I would have given everything and I would have invested in the company, I would have become the owner of the company. If you don't want to put everything at stake, then that means your research is telling you that something is amiss. So only invest in a stock if your research suggests that it is bulletproof to go into. Why am I saying this? Because it happens, right? I have seen people, they do half analysis, they go half the way, and they will find that there are some loopholes in the analysis, something which is not sitting right with them. And they'll say, Are, मुझे तो 30,000 रुपए डालना है. I will to invest 50,000 only or 1 lakh only. I am not that confident, but you know what? Let's do it. Now, these are bad decision makings. Nobody is forcing you to invest. If you have the owner of a company mindset, right? If you're able to put everything in one particular company based on your research, only then you should be considering researching, investing in that company. This will help you weed out 90% bad investments. Okay? Why am I saying this? Because if your money is at risk, you will do in depth research on that stock and truly understand the pros and cons, right? And if you, as I said, if you're putting in risking your money, only then will you do, give it priority, attention, and detail. Okay? So, having said this, tell me something. What is the job of a company? Any company listed there, non listed, what is the job of the company? To make profits? Make profit, to be profitable. Yes, absolutely no. The job of the company is not to make profits. The job of the company is to increase profits. Is to increase profits. Understood? Because if I'm investing at a particular, let's say, profitability today, I as an investor would want higher and higher returns, right? Only then I will invest in my business. And as a business also, you always have to continuously increase your profits. You have to increase your top line, you have to increase your profitability as well. Correct? So is the job of the company only to make profit? No. The job of the company is to keep on increasing profits. That is a sign of a healthy company. That is what I want to tell you. For example, okay, just a second. For example, let's look at TCS. Okay, just a second. Let's look at TCS. Let's look at the 10-year graph. So the price of the stock has been increasing, right? Over the long term, the price of the stock has increased. Let's look at the PNL, March 2014 to March 2025. Let's look at what is the profits. 19K, 19,000 crores, 20,000 crores, 24, 26, 25, 31, 32, 32, 38, 42, 46, 48. Has the profits been increasing over the last 10 years? Have the stock price on average also been increasing over the last 10 years? That is why profitability is important. You, as an investor, you want the price of the stock to keep on moving up, right? The best thing that the company can do is to keep on increasing profits. And as a result, ideally, the stock price should follow. We'll try and keep things very simple, right? Let's say, for example, let's see Asian Paints. Let's see if this works in Asian Paints also, logic. It's been on the rise, right? Last 10 years, if I look at it from a, it's always been on the rise on an average. Let's look at the profit and loss. Okay. 1200, 1400, 1800, 2000, 2100, 2200, 2700, 3200, 3000, 4200, 5500, and then there was a fall. But has the profit always been on average on the upside? Yes, this has always been always on the upside. But see, there was a sudden fall which nobody expected, right? Did the price also move in line with the fall in profits? Yes. So the best thing that a stock can do or an investment option opportunity can do, always look for a profit uptrend. You don't have to be smart. कि नहीं अभी profit is going down. I will prices will going down. I'll pick it up now. बाद में it will turn back. You don't have to do rocket science, right? You don't have to take gambles. There are so many stocks. Keep things simple. Keep things absolutely. Think always from a safety first point of view, right? Always try to be as risk averse as possible in doing your analysis. This will help you save a lot of pain. Okay. All right. So have we understood that the job of the company is to increase profits? This is your second checklist, right? Always look for profit uptrend. For example, RMC switch gears, right? If you had invested 2 lakhs in RMC switch gears, It turned into 60 lakhs in 3 years, uptrend in profit, everything. Yes. So that is why always look for companies with a profit uptrend. Third thing I want to tell you is stay away from loss making companies. I'm telling you guys, checklist is very simple, but beauty lies in simplicity. Sometimes the best things as an investor you can do is stick to fundamentals. Don't try and be fancy. Keep things simple because you have so many stocks to choose from. Why do you want to gamble and take risky bets and listen to unknown people's advice? Okay? Don't listen to my advice. If I tell you buy this stock, don't listen to that as well. Okay? I'm telling you what should be the right framework so that you are able to keep things simple and do it yourself. Stay away from loss making companies. What was number one? I think a lot of people forgot. Number one was basically the entire analysis, right from sectors to analyzing companies using Claude. Okay. How do you stay away from loss making companies? Let's see an example. Okay. Ola Electric. Okay. Am I saying it is Ola Electric is a bad company? It's never going to do well. I'm not saying that it can do well, but at the moment, fundamentally and from a price standpoint, it is not, something which would meet the general investing criteria. Did an IPO, right? Let's see. Did an IPO, stock price went up to 133. Now it has continuously kept falling. Why? Let's see. Okay. What can be one of the simplest things we can correlate to? Okay. Let's look at profits. 2021 minus 200 crores, 2022 800 crores negative, 2023 1400 crores negative, 2024 1600 crores negative, 2025 2000 almost 2300 crores negative, and current recent 12 months 2300 crores also. So is it in a profit uptrend? It's going deeper and deeper into losses. Look at the sales are also slowing down, right? And what happens? So, does it make sense that the price of the stock should also fall? Somebody says loss uptrend. Does it make sense that the price of the stock should also fall? Yes. Yes, because it is what is it doing for shareholders? Nothing. Correct? Let's look at something else. Vodafone. Okay. Let's look at let's look at this. Doing great, doing great, doing good. Okay. 114 rupees. It's near about the 10 rupee mark. For so long. For the last 5 years, it has done nothing. It crashed and it has not even been able to recover. But let's look at the profitability, right? We're looking at profits. When was Vodafone at its peak? Near about middle of 2010s. Okay. Middle of 2020s. Sorry. 3,000, 5,000, 4,000. Okay. Idhar se look at it. 4,000 minus 1,000 crores minus 6,500 minus 18,000 minus 61,000 minus 44,000 minus 28,000, 29,000, 30,000, 27,000. Look, look, ideally, should the price have gone down from 2016 levels? Absolutely yes. Has there been any sign of turnaround? Nothing. Look, why do we want to take risk with our hard-earned money? Vodafone को जो करना है करने दो. You are the guardian of your hard-earned money, right? Always risk first approach. Proper analysis, risk first. Let's look at 197, right? Which is Paytm. Okay, let's see this. Did its IPO? Okay, did its IPO? Still, after 5 years, it has not been able to reach previous levels, IPO levels at all. For majority of its time, it was depressed. Okay, let's look at profitability. Okay, negative, negative, negative 4,000, negative 3,000, negative 1,000, negative 2,300, negative 1,700, negative 1,400, now negative 663. Now, so when the losses were at its peak, the price was also at its, you know, lowest. Now, we have seen a certain up move in Paytm. Do you know why? What is working out? What is actually helping it to generate revenues? Because they have started doing loans, right? Paytm Bank increasing loans, and because they had such a huge database, correct? They could very swiftly, within 6 months of launching, they were doing huge volumes in loans and earning from that. So what I mean to say is Ola Electric, Vodafone, One, Paytm, are these all bad companies? They will never be good. They will never be big. They will never do good. I'm not saying that. I'm not saying that. These are all big companies at the end of the day. But when you have the option, and we see that how losses reflect in the movement of your stock price, why would you, as a investor who is protective of his capital, want to take this gamble? Right? That is not a prudent decision making step that you should be doing. Makes sense to all of you guys? Makes sense? So that is why I say stay away from loss making companies. So, nobody is telling you to do भविष्यवाणी. अरे पेटीएम पॉजिटिव हो जाएगा, ठीक है? Why do you need to do bhavishyavani? There is no need for bhavishyavani in, you know, market analysis and research. Stick to keeping things simple. Then another thing that I want to talk to you about is the types of stocks. Okay. So we have usually on a broad level, I can categorize into three types of stocks. You have the Zomato, DMarts, Britannia. These are what we call as the evergreen stocks. Don't worry, guys. I'll do a recap of the all the checklist, right? These are what we call as evergreen stocks, right? Why do we call them evergreen? Do you think the demand for a Britannia biscuit will be the same throughout the year, or will it be fluctuating throughout the year? It will be same, right? DMart. People go to DMart throughout the year. So that is why we call these as evergreen stocks. Okay. For example, let me quickly go and look at DMart. So DMart's name is Avenue Supermarts. Okay. Let's look at this. Okay. Is the revenue, the profit, is it more predictable? Let's look at it in a quarterly angle, right? Revenue and profit figure. Let's look at this quarterly. Is it more or less stable? There is uniform demand. It is continuously growing quarter on quarter. It is stable, right? Let's look at profit. Again, stable, uniform throughout the year. So that is why these are called as evergreen stocks. Okay. Same will go for DMart, all these FMCG companies usually, wherein, what do you mean? Wherein the use of a particular product is throughout the year, the sales will also be there throughout the year. If the operational considerations are the same, the profits will also be, similar format throughout the year. Okay. The second type, for example, uh, you know, is what we call as seasonal stocks. So, for example, if I'm talking about Pepsi, will you know, will they have the same sales throughout the year? Or well, let's say Manyavar, will Manyavar have the same sales throughout the year? No, right? People consume more Pepsi products, or at least the drinks, during summers. Manyavar, they sell more, ethnic wear during the your festive season, which is from October to, let's say, February, wherein you have all the festivities, you have weddings, and that is where Manyavar does its sales. Okay, so let's look at Manyavar as well. So Manyavar is Vedant Fashions. Let's look at this. So over here, let's see something very interesting, right? Let's look at sales. December 431 crores, March 336 crores, June 300 crores, September quarter, that means June, July, September, 218 crores. So we clearly see that December and March, that means October to March, they are doing better. Okay? Then what about this? Do we see the same thing in 2023 as well? December and March, they do good, and June, September, there is a dip. Again, 2024, okay? December, very good. Then March is also good, but June and July, June and September are flat. So do you understand that there is a seasonality to this? Yes? Okay. So, and then the third type is commodity. Now, what is commodity? Products wherein the brand does not matter, right? So would you know, if I tell you to go and buy petrol, fill petrol, will you have will you decide अच्छा नहीं बीपीसीएल का पेट्रोल अच्छा है एचपी का अच्छा नहीं है रिलायंस का पेट्रोल अच्छा है टाटा राइट नो राइट it's the commodity, it's the product that matters. Price of petrol is the same, correct? Unless and until you have some convenience or some card, ideally as a commodity petrol is not different, right? bpcl ka petrol, the same price, is not different from, let's say, hp ka petrol, correct? For example, take steel, right? Tata Steel, JSW Steel, people are more, they're more concerned about the price of steel than the brand of that they're buying, correct? Paper. Do you very really look at, which paper brand is, or what is the cost of paper sheets? Let's say fertilizers, right? These are simple chemical compounds. Do you look at the cost of a fertilizer or the brand? No, you will look at cost. But okay, so you understand what commodity stocks are, correct? Wherein the brand does not matter, but the product or the cost of the product matters. Now, over here, see, in FMCG, it will matter, right? Somebody might have a preference. Okay, नहीं मैं Britannia का नहीं, I will only have Sunfeast. ठीक है? Or let's say some other brand. I will only buy Manyavar. I will not go to my local store for a Sherwani. I will only buy Pepsi. I will Diet Coke. For example, I will not buy Pepsi. So over here you have preferences, but in commodities, all the products are the same, right? Every brand is selling the same product. So their price matters. Problem with commodity is nobody can predict the margin. Even the CEOs can't predict the margin, right? If you go and listen to the interview of any steel company ka CEO, they will also not be able to tell okay, where the price of steel is going to grow 6 months down the line, whether there will be a supply shortage or a surplus. So, why are we discussing this? Let's look at Tata Steel. Okay. Very, very important for you to understand, right? Let's look at Tata Steel. Let's look at their uh, PNL. Okay. Is the sales consistent or is it fluctuating? Almost 150, 150, 139, 101, 112, 123, 157, again 139, 156, 243, 243, same, no growth. Then lessens to 229, again lowers to 218. So year on year, there is a lot of fluctuation. Let's see quarterly sales. Okay? There's a lot of ups and downs, right? You will not see a clear trend. Let's look at profits. Okay? Quarterly profits. 1300, negative 2500. Again 1500 profit. 500 profit. Minus 6500 profit. 522 rupees profit. Sorry, 520, 500, 500, 1000, 750, 295, 1200, 2000, 3000. There is no predictability. That is the problem. Look at annualized also. 4,000 crore, negative 4,000 crore. Minus 500 crore, minus 4,000 crore, positive 17,000 crore, back down to 9,000 crore, 1,000 crore. Like, and this is not just for steel, right? Let's look at it for JK paper. Same trend you will see here. Look at the net profit, wildly fluctuating. Look at the revenue figures. Look at it from a quarterly standpoint, right? You will get more clarity. Wildly fluctuating. There is no predictable pattern. And if you can't, even if the CEOs can't predict, right? Do you think that you will be able to predict? No, right? So the last thing that I want to tell you is to, again, on this note, sorry, the fourth point is to stay away from commodity stock. For example, right, alkyl amines, again, uh, right, it's a commodity. 2 lakhs invested in alkyl amines would have turned into 1 lakh in 3 years. Do we want that? So why do we want to take risks? I would suggest when there is no predictability, where there is no pattern that you can refer to or you can analyze, best stay away from it. Drop in the chat, I will stay away from commodity stocks, at least for an investment standpoint. I'll stay away from commodity stocks. Yes, a lot of you like to do it. You look at, let's say, steel prices and then you would want to invest in steel. Don't do that. Okay? If you want to do that, trade steel, trade commodities, but don't invest, don't try and, find opportunities in commodity stocks. It needs a lot of practice, a lot of monitoring. Okay? Okay. Next thing that I want to talk to you about is the price of a stock. Okay. So for example, let's say it's winters, right? And you want to have pakoras, you want to have French fries. But there's a street vendor who comes onto your doorstep and he said, sir, 2000 rupees price of potato instead of 50. No matter how much you want to have French fries, will you buy that potato? No, right? Because we are value conscious. But unfortunately, only when it comes to expenses, we are not value conscious when we are investing. We are not value conscious when it comes to stocks, right? So Marwadi people, they have a funda that if they're investing in a business, they like to recover the money in 1000 days or approximately 3 years. It is a rule of thumb that they operate in. Any Marwadis, like I've heard it from my friends, I've heard it in the streets. Yes, there's a particular saying that they say in Marwadi also, I'm forgetting that. But this is the rule of thumb that they have. Correct? Now let's try and understand this. Okay. For stocks, we pay higher. I was talking about value conscious. Let's look at Zomato or Trent. Okay. Eternal, right? Ha Bhagwan che. What is this particular ratio? Where did it go? PE. 1477. What do you mean by that? So, for example, what does it mean? That if Zomato per share, okay, because you'll be buying a share, if Zomato is making 1 rupee per share profit, okay, you are basically buying that share for 1477 rupees. To be the owner of 1 rupee of profit, you are paying 1477 rupees. Does it make sense? No. To earn 2 rupees of profit, you will be paying 1477 into 2, correct? To be an owner of a share which is making 2 rupees of profit per share, you will pay approximately 2950. What is PE? This is where I want to talk to you about the PE ratio. Like, let's look at Trent as well. Okay. What is the market cap of Trent? 85.5. That means if a share is making 1 rupee of profit, you are paying 85 rupees to buy that share. So think of it this way. If the company continues to make the same profit every year, how many years will it take for you to recover your investment? 85.5 years to recover your money. Correct? Understood? This is what we call as the PE ratio. Okay. And I'll just tell you one thing, stay away from very high PE companies. Okay. Understand this. Stay away from high PE companies. Okay. Let's look at what I mean by that. Okay. Let's look at CDSL. What is the PE of CDSL? Listen to me. I know all of you have a few questions. Listen to me. Your questions will be answered. How much is high? Exactly that. What is the PE of CESL? 63.4. Okay. Market cap 30,000 crore, 63.4. Okay. What is the growth rate? What is the profit growth rate? 31% compounded profit in the last 10 years, 38% in the last 5 years. Okay. So let's take an average. 5 years, 38%. Every year it has grown its profits. Okay. So stock P is 63.4. That means for 1 rupee of profit, you are okay to pay 63 rupees. Okay. But remember that the profit is also growing at how much? Over the last 5 years, it has grown at what rate? 38% per year. Now let's look at another example. Okay. Let's look at Indian Oil. P is 9.34. So 9 rupees you're paying for 1 rupee of profit. Okay. Very low P compared to CDSL. What is the growth? Last 5 years growth is 22%. Lower, yes. So if I just say that, you know what, CDSL is expensive, 63, IOCL is 9.34, is it an apples to apples comparison? No, right? Because the growth rates are different. The growth rates are different, correct? For example, let's go back to Trent at 85. But what is the growth rate that Trent has seen over the last 5 years? 67% profit growth. So it's very difficult to compare these P. Of course, yes, within an industry, you can make some sense of within one same industry, you can look at P, but across industries, so never. So, what is the solution? Right? How do we factor in growth? We understand that if the growth is higher, I don't have a problem paying a higher price for the stock, right? Because my earnings will increase. The answer is something, yes, as a lot of you have correctly mentioned, it is the PEG ratio. What is the PEG ratio? Basically, if I normalize it, make it apples to apples by dividing it by the growth rate. If I normalize the growth rate of the PE, right, then what I get is the PEG ratio or the price earnings to growth ratio. Correct? So over here, you see that the PEG ratio is 0.62. What is it for CDSL? The PEG ratio is 3.3. Okay. What is it for IOCL? The PEG ratio is negative because the earnings have turned negative. So let's go back and understand what we were learning. See, if P is less than 10, market is expecting no growth, especially in our Indian economy, right? If P is between 10 and 30, market is expecting moderate growth. Between 30 and 60, market expects high growth. Above 60 is market expects very high growth. Now you need to see whether this P is justifiable, whether that level of growth to justify a high P is there or not. The potential is there or not. Correct? Now, that is wherein this is a simple framework that will help you, you know, filter out mistakes. Correct? You can't rely on screener for peg ratio. Absolutely correct. Because this takes a lagging peg ratio. You should look at charting for peg ratio. Correct? It takes a forward EPS. Absolutely correct, Prachiti. But understand the concept. Okay? Take P divided by forward EPS growth rate. Okay? Again, you'll find this on Google. Okay? Now, what I want you to understand is if a stock has high PE and high growth, it is risky. Growth PA, but P is also very high. It's risky. If a stock has relatively low P but high growth, it is called a multi-bagger. Right? This is what where we want to operate in. This is where we want to do our analysis in. If it has low PE, low growth, no one cares about this. Okay? And if it has high PE and low growth, then it's a disaster. Okay? For example, I'll show you an example of a disaster. PC Jewelers, right? Let's look at it 10 years. It was doing so well, okay? And then look at what happened. Okay, what is a P? Low P. Okay, what is the growth? Okay, still not materializing. So again, you have to be very cognizant of this thing. You want to look for low P and you want to look for high growth. Okay, now that is the fifth checkpoint. Always invest in low P, high growth stocks. Then, for example, something like Gargi Fashion, right? 10 lakhs invested in Gargi Fashion would have turned into 2 crores, 1 crores in 2 years. Again, these are illustrative purposes. So always look for low PE, high growth so that there is a lot of room for the stock price to grow up. Then I think the next question that all of you have is okay, but we have more or less learned how to buy, Rahul sir, correct? What about when to sell? What are the things that we should look at to know that we should exit? Should you sell if the price falls? Should you sell if the price falls? Should Rakesh Jhunjhunwala ji had sold his Titan shares when it fell to a 60% correction at the very start? Would it have been a household story? No. But why did he not sell? Because the thesis or the rationale behind investing did not change. Was the company doing bad? No. It is just the price was falling because of, you know, demand, supply, all that. But the business was still strong. Vijay Kedia talks about Serra, right? He held on to Serra even when it fell below 50%. Why did he not sell? Because the company was still doing fundamentally good. Nothing had changed from a fundamental standpoint. It is just unfortunate that for a strong small company the price fell. But business wise, nothing had changed. So if the stock price falls, do you just go and sell? If you buy a iPhone today, or let's say you buy a car today or a flat today, tomorrow the price of the thing goes down to half momentarily, correct? Will you sell? No, right? So but when should you sell? Don't see, you as an investor, if fundamentally the business remains strong, you don't sell. But when do you sell? When there is a sudden drop in profits and management can't explain. If it is a one off scenario, they'll say there are macro challenges, regulatory challenge, right? Leave. If there is, again, right, PC Jewelers, it was dropping its profits and then it fell to the bottom, never recovered from there. So if you see that the profits are dropping, get out, right? If the profits are dropping for a one-off reason, it seems justifiable. Go to the management's con call, see what justification management is given, or see the call transcript. Okay? If it makes sense, then okay. But if they can't justify it, if it's a business, if that business is failing and that is why they're making a losses, then what do you need to do? You get out, right? Understood? You don't need to make a stock. As long as it is a profit uptrend, you stay there, otherwise you get out. Next thing that I want to talk about is last but most important, diversification. If you think diversification is important, which we learned in day one for your stock portfolio, it is even more important if you want to build a small cap portfolio. Because see, a small cap portfolio can look like this. Okay, capital stock, this, right? If a stock A, if you invest 20 rupees and it goes down to zero, you have zero returns in 5 years. Stock B, let's say for example, hypothetical, invest 30 rupees. In 5 years, it becomes only 60 rupees. Okay. Stock C, okay, 30 rupees, it becomes 120. Gives you 400x returns in 5 years. D, only invest 10 rupees. It becomes 10x. E, you invest 10 rupees, it becomes 20x. Right? But see, what happened? Majority 20, 50. Out of your 100 rupees, 50 rupees is not doing anything only, right? Sorry, 50 rupees is not doing anything. So it is very, very important to diversify in small caps because take it for granted, some businesses, even though they're promising fundamentally very strong, maybe down the line, they fail. You can't predict, right? And some businesses, maybe they continue to do good, they become bigger and better as well, right? So very, very important to have diversification. 20 rupees are going to zero only, correct? So again, that is the most seven checklist have diversification. So your checklist is first choose emerging sectors, do thorough research, right? We saw how you can do end-to-end research using AI. Second, only invest in profit uptrends. No fatkabaji required. Okay? Stay away from loss-making companies. Again, no, nothing reversal hoga. Not required. You have so many options. Risk first approach. Okay? Only invest in evergreen and seasonal stocks, not cyclical or okay, not commodities. Then try to buy low PE high growth stock. That should be the zone in which you're doing your research. And exit if there is an unsubstantiated drop in profits, you need to exit. Okay? And last but not the least, keep your small cap portfolio very, very diversified. Okay? By the way, do you need some help or having known this checklist, can you do your own research? Knowing this checklist, can you do your own research? Is it good enough? Is it simple? Somewhat, but how do we, sir? Do you still want further help? Do you still want further help? Somebody said Gensol. Yes, I think a very good point. Companies which can like Gensol, right, looks very good, but they can go to zero also. That is why diversification is very important. Want help? Screening small cap stocks. Okay, chalo, I'll give you that. I'll give you a small cap screener. Okay? It will be there in your notes. I'll be sharing it as well. The name is SpringPad Small Cap Screener. Okay? Let me show you the screener. Sorry. Yeah. Oh, we were already there. Sorry. So this is the screener. Every time you open this, I have given all the fundamental logics for a good small cap. This is a good starting point. Okay? All the fundamental logics for a good small cap company. And then you can start doing your research from here. Happy? You don't need to look at 2000 small cap stocks. Do a basic filters. You can play around with this as well. But this is what I've built for you. And then you can conduct your own research. Happy? I want happy in the chat. Otherwise, I will not share this in today's resources. Just kidding. By the way, how many of you think that you'll be able to apply the 7-step checklist across all these, let's say, filtered stocks and do your own analysis? Me. Sometimes it will give 10, sometimes it will give 7, sometimes it will give 30, right? So, depending on which are the stocks which meet the criteria at a given point in time, the number of stocks will vary in the screener. Acha, shall I help you do AI for smarter analysis? Chalo, I'll help you even further. Do you want my help to filter, do your own research on the filtered stocks from the screener? Definitely. Yes. Okay. So let me show you how you can do AI for smarter analysis. I'll help you with that as well. Okay. So we have our SpringPads prompt, small cap opportunity finder. Okay. This is the prompt. Let me show that to you. Okay, just a second. This is the prompt. So you will not even have to pull the screener results, copy the entire prompt. Okay. Again, I'm just showing this to you. Okay. I have already run this. I hope it is there. I hope this is there. This should be the one. Just a second. Yes. Okay. So the prompt is, let me show you the prompt. So I ask it, I have already given it the screener link. You don't even have to download the results from the screener. Okay. The screener link is already here. It is there in the prompt itself. So whenever you want to run the screener, instead of running it, just take this prompt and based on the filter stock, sometimes as it is 10 now, right? If it is 20, it will go through all 20, analyze and give you the ones which have the best, metrics. Fundamentally, whichever is the best two, it will filter out for you. How does it look like? So it goes to the screen. See, this is how smart AI has become. You don't even have to go download. Give it the screener link. It will go and fetch the details automatically. Okay? It does everything. And then you see, okay, I went through everything. I've done my analysis. Top two small cap stock opportunities from this result is Alpex Solar. It gives a scoring also 82 out of 180. What are the ticker, market cap, business in two lines? What is the investment thesis? What are the key metrics? What is the competitive advantage? What are the growth drivers? What is the niche positioning? What is the scalability assessment? Again, because it's a small cap, you need to try and understand whether it is scalable or not. Okay. Financial quality, management assessment, valuation, risk, catalyst, score breakdown, how it comes to 82 out of 110, and it gives you a verdict. Now, again, what did I say about verdicts? Don't treat it as investment advice, but it will help you filter down and do additional research. You don't need to go through research each and everything. You can do your own research now into more depth on only these two. Okay? Rank 2 Webstol. So does the same analysis. So out of these 10, it will pick out two. If it gave 30, it will pick out two for you. Happy? You don't have to do your analysis. Now you can just work on these two stocks, do your analysis on these two. You don't have to do it for 20, 30 stocks, right? Okay. It gives some special mentions as well. Okay. But, anyways, happy, helpful. How to use AI to filter small cap stocks? Have you been able to learn that as well? Yes. So tell me something, guys. Now, you know, do you understand how thoughtful stock selection can play a role in your long term wealth building? How incorrect stock choices, I have shown you alkaline amines, right? Incorrect stock choices can erode capital over time or loss making stocks. Some things which are very, very simple, but people still do it, correct? Why having structural constraints limit large institutions in small caps, but that limitation does not exist for retail people like us. Have you been able to understand all this? I wanted to take a lot of time teaching you today because I believe this is really, really important for all of you to understand, right? So, and you know what? There are only two rules to investing. Allow compounding to do the heavy lifting. You keep it smart and simple. And more importantly, manage risk before chasing returns. Can I have a 2R in the chat if you understand these two rules? Investing, there is no get rich quick. Keep it simple, be thorough, be disciplined, do your research, do your analysis, and give it time. Let compounding take its own course and always have a risk first approach. When it comes to your money, don't try and be fancy. Don't go, you know, try and prove the markets wrong. If a stocks is giving negative returns, if the profits are going down and down, the stock price is going, nahi, bada naam hai, turn around karega, I will go and invest. Not required. You don't need to take that risk at all. correct? And you know why many people lose their capital? First, because of half knowledge. I think we have been able to take the first step via this FFA to correct that, and you have taken that step to understand it. The other thing is relying on tips, right? Telegram, Twitter, YouTube. See, two things. जो लोग tips दे रहे हैं ना, पैसा कमा रहे हैं उसमें से, non-registered entities, of course, not SEBI registered, they see their tips are useless. They're just doing it to make some quick money out of you. Secondly, right, the problem with tips is you don't understand what is happening. You don't understand what is happening. And if you're not understanding, how will you be independent? How will you learn? How will you be able to decide what is good for you and what is not good for you? So, for example, I can be okay having small caps, right, in my portfolio. My father, who is 60 years of age, right, about to retire in the next 5 years, he might not be comfortable making a small cap portfolio, correct? He might not be comfortable investing in mid caps also. So again, if you don't understand the reason, the logic, the framework, the thought process, and you just blindly listen to somebody else, you are first of all not understanding what you're doing with your money. Secondly, putting your money at risk. And the third thing I would say is not having a mentor. I think that is something over the last 4 days you can agree on, right? Our job has been to try and teach you what is the right way to make you independent. We don't want to give you fish. We want to teach you how to fish for yourself. Like even Warren Buffett had a mentor, right? How many of you know his name? Any guesses? Benjamin Graham. Correct, right? And even Rakesh Jhunjhunwala had a mentor. Who knows his name? Radhakishan Damani. Absolutely correct. Founder of DMart. Now, you know what? Historically, again, this is a reality check. A small number of standout stocks have contributed disproportionately to long term portfolio returns. Like I have already said this, right? Your majority of your portfolio will keep on performing average. But if you do the right things, if your picks work out in the future, they will always, and you see successful people, right? If you see their interviews, if you go through their disclosures also, you will see that always has been that one or two standout stocks which have given them the majority of the returns in their portfolio. Correct? So for Rakesh Jhunjhunwala, it was Titan. Correct? Now, you know, what happens in a small cap portfolio, even if you're able to do okay, right? Combine everything. This is hypothetical, of course, but for example, if you want to build a small cap portfolio, first thing, start small. Okay? Don't put up a lot of your entire money in small caps. Very little capital in small caps. Maybe 10% of your portfolio, 5 to 15% of your portfolio. That's it. But if, let's say, go back to the example that we diversification, if you're somehow over the course of time doing you get a 30% return on your small cap portfolio, right? Within 30 years, if you're starting just 3,000 rupees, how much are you putting up? 10.8 lakh. But if you just let these compound, take proper care of it, this can go up to 36.22 crores. Now, of course, you will say, Rahul sir, inflation ka kya? Even after inflation, it is 11.09 crores. Okay? Again, that is why this is hypothetical, of course, you know that. But that is why people have small caps in their portfolio. People who are young, people who have a risk appetite, they keep small caps in their portfolio just in the hope that they are taking the right picks. And with time, if you give it time, these companies can become bigger and bigger, right? And talking about time, learning all about investing and trading, do you think you have lost time in making responsible personal finance decisions and having a strategic framework? Be very honest. Like I started off very early, like after in college. I still think I should have started if I had started earlier, because now I know how compounding works. So the thing is that you'll always feel that you have lost time, but don't dwell on it. I would say take control of your education and start. There is no problem. The only thing that you can do is start as soon as possible, but proper discipline, thorough research and analysis, and the right balance, I would say, is to pursue active market opportunities and to work towards long term wealth creation. Trading to pursue the market opportunities and investing to work towards long term wealth creation. This, I think, is a very, very good balance. Does it require you to leave your job, either trading or investing, whatever we have taught you? No, right? This, I think, is a right balance, correct? And what do you need to master to protect and grow your capital sustainably over time? A few things. A few things. First, how investment decisions are evaluated using professional frameworks. You have already learned a little bit of it from Pratik and me over these 4 days. There has to be professional logical frameworks, but there's so much more to this, right? How to study small cap businesses thoroughly through fundamentals and risk, how to do portfolio construction influences long term outcomes, how price trends and market behavior are used to support investment decisions. Yes, that means technical analysis. How taxes, structures, and cost affect net returns. Somebody was just saying taxes when I was showing that example. Yes, very, very important to understand tax implications, and how leverage and asset protection are understood conceptually, right? Very, very important. This is what one should do holistically, correct? Do you agree? Do you agree? How to use professional frameworks in trading, how to thoroughly go through your investment selection, how to set up your portfolios for long term outcomes, how to use technicals for investing at right prices, how to use taxes structures to make sure that you are doing it efficiently, you're not just giving away free money, and how to leverage, use debt to create assets, and also very, very important to protect your assets. Do you think that mastering these principles can support a disciplined long term wealth building? Do you think so? Yes, 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 yes. Well, you know what? There was I love Vijay Kedia's interviews, right? He keeps it simple, but he keeps it very logical. And there was in one particular, he was, I think, a guest lecturer at event, right? A chief guest, sorry. There was this thing that he said. You can look it up on YouTube. One opportunity can change your life. One idea can change your world. One mentor can change your mindset. One lesson can change your approach. One bull market can skyrocket your net worth. And one stock can transform your existence, right? So, again, I would like, on the back of this, I would like to ask you something. Would you like to learn AI powered investing, small cap investing, technical analysis in investing, tax mastery, debt mastery, and more directly from us together on your journey towards financial security over the course of time? Then drop in the biggest yeses in the chat. Yes, 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 yes. Amazing, amazing. All right. So with that, thank you so much for your yeses. I want to introduce you to the Generational Wealth Mastery Program. This is a separate program that I conduct, right? It is entirely to do with investing. It's a 3 month life coaching program to teach everyone right from the basics, from beginners level on investing to the most advanced levels on how to automate investing using AI, learn long-term wealth creation frameworks, and knowledge that professionals have been using for decades. Can I take 2 minutes to just give you a glimpse? I'll be very short and sweet about it, right? Yes. So again, as I said, it's a 3 month program. In across 8 weeks or 2 months, we master investing using AI A to Z. We cover personal finance, and then we have a few exclusive expert masterclasses for you as well. Okay. So to tell you a little about the investing session, is it different from LWB? Yes, guys, this is LWB is predominantly focused towards trading. This is focused towards investing. Okay? So let's just give me 5 minutes. I'll take you through what it is and let you know. So what we do across this 8 weeks or 8 modules is first we do learn about financial analysis using AI. We gave you a glimpse. There's so much more to it. We go right from scratch. Okay. Then we do macro and industry expert, research expert. As a second module, we go into depth about macro analysis, economic analysis, policy analysis, sectors, and everything into detail and all how we use AI. Okay. Then we have module 3, which is dynamic portfolio mastery. How to set up portfolio. What are the portfolio considerations that you should know while building your portfolio? Then we move on to the individual styles of investing. We have the growth investor blueprint, wherein we discuss growth investing markers, the business life cycle for growth investing, quantitative metrics, qualitative metrics. What is the framework for growth investing? We do a lot of case studies. What went right? How do you can identify, take lessons from history, and also we do AI based opportunity finding, right? So very, very exciting. Then we have value investor blueprint. Again, similar to growth investing, we now move to value investing. We discuss the frameworks, things that you should look out for. How do you identify those? We do case studies. We do AI on how to filter value investing opportunities. Same goes for income. If you are somebody who wants a regular source of income, we have investing income investing frameworks as well. Correct? We again follow the same approach. We discuss what are the different types, risk considerations, what are the cash flow metrics, what are the different frameworks of income investing. And for each and every style, we do different frameworks, right? Then we do case studies plus leverage AI. Then something which is very, very important, technical based investing, using technicals in investing. So we will see how you can leverage technical analysis in investing, how to use technicals to get better entry and exit signals. And last but not the least, I gave you a glimpse. It is what we call as techno funda or fundamental. Absolutely correct. And then lastly, I've given you a glimpse today, but we'll be going into detail on small cap investing, right? Much more detail. We'll do case studies. We'll see how you can go into more qualitative and quantitative metrics. And of course, we'll be seeing how you can do more with AI. So that was the entire investing using AI part. 2 months will be focused on this. Then, as I continuously say, personal finance is also very important. We have 4 weeks of personal finance, wherein we'll be discussing about the right way to use credit cards to maximize benefits for you, how to do tax planning, and we'll be discussing tax hacks. We'll be having a proper practicing CA. Come and tell you what all you miss while you are filing your taxes and how you can save taxes legally. We'll have an insurance expert come and teach you all about how insurance being the most missold product in the country. Most of us have it. Most of us don't even know that what we have is not right or suitable for us, or is not going to help us when the time comes. So they will teach you what are the common pitfalls, common mistakes that people do in insurance, and what you should look out for you and your family. So again, a masterclass on that. And last but not the least, we will be discussing all about building one's personal finance plan, be it a wealth creation journey, be it a post-retirement, how to manage your expenses journey, be it a retirement planning journey, and how to leverage mutual funds. I'll be discussing all about that in the final module on financial planning. Okay. So, and not just that, even after the 3 months, we will have a few expert TED classes. So, we will have an industry leaders expert masterclass on institutional research and investing. Some, people from these top institutions are going to come and give you a lecture on how they go about within an institutional, at an institutional scale, how they go about research and investing, right? So it will be either somebody from JP Morgan or Goldman Sachs. Correct. Then we'll have a cryptocurrency masterclass wherein you learn about the what is happening in the crypto space, right? Fundamentals kya hai crypto ka? What is a blockchain? What is digital assets? What is a technology? How you can strategically do crypto investing, Okay? What are the different frameworks? How to evaluate crypto assets? What you should be looking at? How to master crypto trading? What you should understand? Like what are the usual things that a crypto trader should look at? Market structure, price behavior. It is going to be a little different to how you usually do it for stocks because the volatility and the market behaves very differently when it goes to crypto, correct? DeFi and beyond, explore decentralized finance concepts, and of course, most importantly, understand custody, security practices, regulatory consideration, and key risks because how to do crypto safely if you want to do it at all. So I think this is again a need of the hour that we discuss this. So we have kept this masterclass. I'm not a cryptocurrency expert. I'll be very honest. So we have a proper expert who is going to come in and teach you this. Then securing assets and debt mastery on how to leverage trust structures, right? These are HNI wealth managers and they will share hacks with you. Again, a professional is going to come in. They're going to share all the hacks that all these HNI people use to do it. Okay? How to secure your assets and lawsuits and liabilities, tax structures, leveraging debt. Okay? And last but not the least, if you are somebody who likes to, likes the FD route, likes a fixed income flow, we have a bond investing mastery as well, wherein we teach you how to identify good bonds, how to create a portfolio of bonds, and how to diversify it for a continuous, steady source of income. And if you don't want to be involved in the equity markets. Okay? That is why people want who do bonds. Especially, it is good for people who are retired and they need a regular, predictable source of income. Correct? So we have these four additional master classes as well, and it is, I just want to say that by applying what is taught in the program, you will be able to develop a strong understanding of investing using AI. Learn how investors identify high potential small cap opportunities, price action, how does it work in investing, explore cryptocurrency, gain awareness of tax efficient structuring concepts, and believe me, you'll be able to understand how successful investors approach long term capital growth. And as I said, as was with LWB, even with GWM, if you don't like the teaching, if you don't think that the teaching is going to add value to you later on, you have 100% money back guarantee. After you attend everything, if you don't think that it has given you any wisdom to put it into practice yourself, no questions asked, 100% money back guarantee. Okay? Now, can I quickly summarize? So, what all is there in the GWM program? Mastering investing using AI, a credit card mastery workshop, a insurance mastery workshop, a tax mastery workshop, wealth planning and mutual funds. Then we have the few expert masterclasses, institutional research and investing, securing assets and debt, cryptocurrency. We had the fixed income one as well as you'll get all the AI tools and prompts for investing bundle. Okay? Okay. And guys, okay, this is the regular fees for this is same as LWB was 2,45,000. But any guesses? It's not going to be 2,45,000 for you, right? Any guesses? It's 1,25,000 plus GST. Okay. Now, how many of you want the biggest surprise from me? How many of you want the biggest surprise from me? Irrespective of whether you have gone for LWB yesterday or not. Me, you can get GWM for not 1,25,000 plus GST, for not 75,000, as somebody is saying. You can get it for absolutely, absolutely free. Guys, so all of you who have, booked your seat for LWB yesterday, you get GWM for absolutely free. It is like a buy one, get one. Right? Why did Pratik and I do this? Because we really, really feel that investing and trading should go hand in hand, right? You need the knowledge of both for it to be sustainable in the future. Happy? Yes? Happy? All of you who have gone for LWB? Happy, happy, happy. Now, thank you so much. Thank you. Thank you. It's my pleasure. Thank you so much, guys. I have a request from you, right? Yesterday we had like amazing reaction, but there are so many people who, were not able to join because of payment failures or something. All of you who have registered yesterday, can I take your permission and add 20 more seats? 20 more seats with all the early bird benefits. With your permission, can I accept 20 more people? Yes, yes. So, thank you so much for that, guys. Thank you, thank you. And yes, all of you who were not able to enroll yesterday, if you want to enroll now, you get both the LWB and the GWM program just for the price of one, right? That to 1,25,000 plus GST, just need to pay 5,900 now to book your seat. Remaining 25 installments that will help you set up later. Okay? How do you get both the program? You can just scan the QR code. The QR code is in front of you. You can scan it. You can book your seat. Drop in a done in the chat after you are done, right? Yes, you will get 20 more seats and all are early bird. You will get all the early bird benefits. Don't worry. Okay? Thank you. Thank you. Done. Done. Guys, just give me 15 minutes and I'll be sharing all the resources and I'll be sharing the notes from day one also. A lot of you were saying that I don't have day one resource, I don't have day two resource. I saw it at the beginning. Don't worry. Give me 15-20 minutes. I'll be sharing all 4 day resources. Okay. In the meantime, like you can book your seat for both LWB and GWM for the price of one. Again, as I said, all that you have to do is just pay 5,900 and book your seat. We'll be helping you with the rest. Okay. Yes, the fee structure is see, the fee structure is same for LWB and GWM, right? It's 1,25,000 plus GST. It's basically divided into 25 no cost installments. Okay. Which brings to 25 no cost installments of 5,900. You're paying one 5,900 installment now. Rest 24 you can pay across 2 years. So across 2 years, you can 5,900, you can pay every month. Okay. We have kept this very, very flexible. We have given you 2 years time. See, the program is for 3 months, right? And we're giving you 2 years to pay because we want to make it, I don't want it to pinch you. But yes, why do we need to keep it? Why is the program priced at this? Because we're taking a small batch. There are at least 20 to 30 people who are working in operations. There will be 13 mentors apart from Pratik and I. And and all of these mentors apart from me and Pratik, they're not full-time employees. So again, yes, that is why it is, I understand it's pricey. That is why we have kept this, you know, across 24 years for you. All you need to do is for today, if all now you need to do is pay 5,900 and book your seat. Right? What happens to AI Career Accelerator? Yes, you can postpone. And the good thing is you get, just to give you more, even more value, you get both the programs together. So you learn the best of trading concepts, you learn the best of investing concepts, you learn the best of personal finance concepts. So you have an encompassive knowledge of what you need and you're able to make better financial decisions. QR QR code send. This is the QR code, Deepak ji. GST, yes. Timings, it will be predominantly on the weekends, right? And you can reschedule your AI career accelerator. I have actually spoken to Aditya on this. Both of us, we believe that postponing the AI career accelerator is the best decision that you can take if you are joining LWB and GWM. And we will help you start a fresh batch of AI career accelerator. Once you have postponed, we'll help you start a fresh batch. You don't need to worry about it. Okay, because AI Career Accelerator happens very frequently, but LWB, GW, we do it only once a year. कोर्स की रिकॉर्डिंग होगी every time we go live in LWB and GWM. We will record and we will, ठीक है, give you everything in a LMS. You'll all the AI prompts, materials, PPTs, everything, the recordings. Every time we go live, it will be there. Okay, ठीक है. All right. How many of you think, are on the doubt, having a doubt whether it's a worthy investment? Seats gone. I think 7 seats are done. So we have 13 more seats. You can take your time and do it. But yes, 13 more seats. Done. Done. How many of you have a doubt whether it's a worthy investment or not? You're on the fence. You know what? Let's, you know, let's hear Chaitanya. You can't hear the audio, is it?
Is it better now? Can you just tell me if you can hear the audio now?
Uh,
Yes? Oh, my bad. Just a second.
this is coming from a non-commerce side.
Let's go back to Chaitanya one.
Everyone, this is Chaitanya. The program has been an
You
incredible.
don't have to take it from me.
The program has given me so much confidence that I can never fail in investment and trading now. So that's the kind of confidence booster it has been for me. All the mentors have been incredible, incredible. Their inputs, insights, their support, the way they have answered our questions very patiently. Particularly Pratik sir and Rahul sir, they are amazing. Like this is the once in a lifetime opportunity to learn from the best of the best. If any of you get a chance, to go through this program, I highly recommend this once in a lifetime opportunity.
And if you want, let's say, a little more detail,
First background, it was difficult for me.
Srinidhi ji done. Yes.
And I was very wary of the fact that whether I really understand this business. But the mentors and the teachers have made the course so easy that even the most complex topic of number crunching has been converted into fun and easy topic for you to understand. This course not only teaches you personal finance, but it teaches you finances, um, which will help you to understand businesses around you, especially if you're an investor who wants to invest in small scale mutual or large scale businesses who's through stocks and trading. This course also gives you an opportunity to venture into the field of trade as a alternative source of income or as a main source of income. Make it into an experience that you would never forget, and you would always remember these teachers for the jewels of information provided by them to their students. Thank you all to the sirs and the support team to bring.
By the way, is there anybody you guys are asking about the timings? It'll be in the on Saturdays and Sundays. You'll get all the recordings, right? But just wanted to, and we will be setting you up. All of you who are joining in tomorrow, 8 p.m. on Monday, we are going to have an intro call wherein we discuss all these details and get you started on the program, right? So it will predominantly be on Saturdays and Sundays because that is wherein we want to do the majority of the learning. Yes, you will get a GST invoice. You can claim an input. And we will have live market support sessions, which are provided by SpringPad Wealth Solutions, our RA entity, wherein we'll teach you how to implement those in live markets, right? And by the way, right, I was just seeing that somebody says it's funny that I'm not employed right now, it is good for me. So if you know if some you are not in a professional practice, let's say, is there anybody who is a housewife, or let's say you are in a job switch? I don't like sorry, housemaker. Yes. So you know what, we have Divya Manoj, who is a housemaker, and now she's doing it,
That helped a
as a profession.
that investment purpose. Related to that, actually, what I like to tell is that, especially that ratios and all, because for after selecting a sector, when we are going to stock, actually, I used to look into that PE ratio with related to industry, how can
That's a lot of you, by the way.
clear cut idea. That helped me a lot actually. So initially I started with that long-term investment and my journey started in 2024 onwards. I started accumulate the stocks. Right? And my goal it is to meet my kids' education purpose actually. So I can go with my investment at least for 3 years. So I started in 2024 and after joining ThinkPad also I accumulated some more. The market was down for last 5 to 6 months, so at that time also I gathered more. Right now I'm focusing on with the intraday actually. For that your Bulls AI it is helping me a lot. Yeah, especially the options actually. But
Acha, coming to bullseye and options, like Divya ji, she started talking about bullseye and options. By the way, I just completely forgot. I need to tell you all about the early bird benefits, right? And I have two additional special early bird benefits that I want to give all of you today, right? If you have already got the seven yesterday, I have two more for you. And can I quickly take you through the early bird benefits, right? So first and foremost, they right, guys, just stick around. Again, just give me another 10 minutes or so, right? So, early bird benefits. Remember, I talked about AI and mutual funds. How I said that having the correct mutual funds tailored to your goals can help you with your goal based investing. Remember, or did you all of you forget about it? Yes. So let me show you what you get. I want to introduce you to SpringPad Mutual Funds, which is our AI-driven mutual fund research and investing app. Correct. It now, what problem does it solve? What problem? Yes, if you're enrolling today, you get all the early bird benefits, right? Even this that I'll be telling. So when you go for mutual funds, right? You just go look, see which has the past performance, check a few ratios here and there, and you invest arbitrary amounts. Yes, rather, there is a proper framework, what we call as goal based investing. Usually works best when you're doing SIPs and mutual funds, right? Your first job is to identify and plan your goals and personalize as per your risk tolerance and the time horizon. Now, this is something you can still do if you know you can still do on your own. But where people get lost, and you can tell me if this is something which has happened with you, is for your goals, how to choose the right portfolio of funds for each goal. Let's say you have five goals, okay? It can be, let's say, your children's education, a vacation, a dream house, whatever. Let's say you have five goals that you're working towards. For each and every goal, you'll have a separate plan. In that plan, let's say to achieve it, you will do SIPs into, let's say, two, three different mutual funds. And how much SIP to do, in what mutual funds to do for that particular goal. Now you repeat the same process across your five goals. This is where, and tell me something, don't you feel that there is a guesswork involved? And this is where you go into arbitrary decision making mode and guesswork. अरे 5,000 डालेंगे, 5 fund है, 1,000. Tell me very honestly, is this something that has happened? Is this something that you do? Yes, this is what majority of the people do. But do you think you know yourself, right? This is not the right. This doesn't feel like the right method. Correct. So that is why we built SpringPad mutual funds. And the good thing is you will have lifetime access to it. Would you like to see what I mean by it? How does the platform work? Let me quickly show it to you. Okay. So if you go to, okay, just a second. Where did it go? Just a second, right? So let's say retirement, right? It will help you plan everything for you, build your retirement goal, right? If I go to MF research, I will be able to do everything, right? SIP returns, lump sum returns, rolling, all these advanced level, and everything is done with AI. And the best thing is, it will also tell you based on your goals, it will tell you how much SIP to do for that particular goal. It will tell you which are the funds you should be choosing. and it will also tell you how much you should be allocating to each and every mutual fund of that SIP amount. Do you think this is actually solving a real problem that investors face when it comes to mutual funds with the help of AI? Absolutely yes. And that is what we set out to do, and that is what we have been able to do. I will love to show you more about the platform in the upcoming few days, starting from tomorrow. But what I would love to say is that you will have lifetime free access to SpringPad mutual funds. That is the special early bird bonus that you get today. Happy, 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 happy. And you know what? This is Sunil ji. Just a second. Guys, can you see my screen by the way? Yes, this is Sunil ji. He's a QA engineer.
So first of all, as I said,
Here and
I
speak
didn't have
about
any
the mutual
background of
funds.
what the fundamentals and technicals are. I got to understand the candlestick patterns, how to implement them, and how to read them. I see a lot of things over the net and a lot of social media going around, but got to understand more details, how to read them and how to implement them so that it is beneficial for me. But mutual funds, how to read the mutual funds, like to understand the alpha, beta, Fortino ratio, etc. Everything which I didn't have any clue of it. I just got to know mutual fund, read the data, see the past performance.
And you know what, guys? So I think it's buffering. But the other thing, before I move on, I would just like to say that all of you are asking Rahul sir this,
It
Rahul
could
sir
be the
that.
base,
Okay. Uh, Wait for it. I have a lot more to tell you, and your questions will be answered. The second thing that I want to give you is Bullseye. Right? You already know this. Bullseye is the second early bird that you're going to get. India's first AI-driven algo trading platform. It will help you do everything like use proven algo strategies, customize your own backtesting, create your own AI powered strategies within the platform. It has server based execution, hassle free broker integration, and automated buy and selling end to end at just one click a day. Right? All of you will get 3 months of free access to Bulls AI for absolutely free. Right? And you know what? I can help you, show you what experiences people have had using Bulls AI.
very basic,
But
and it
in the interest of time,
very advanced
let
level.
me come back to this later. Okay, let me come back to this later. Now, what? So, all in all, you get exclusive access to SpringPad's AI-driven tech platforms, Bulls AI and SpringPad mutual funds. That is, I think, one of the biggest offerings that you get in the early birds to go along with the education that you get in LWB and GWM. Like, if you think this was already valuable yesterday, today it has become, you know, the value proposition has increased twice. Okay. Can we get access to the documents? You will get access to everything. Okay. It is really double. How many seats? Just a second. Let me ask the team. So we have 11 seats done. There are 9 more seats left. Good. I think I'm still yet to go through the early birds. So, and guys, if you have any questions, I'll open the floor to questions. If you want to ask any questions before you enroll, I'll open the floor to do that. In the meantime, you can continue enrolling. Okay, we have 9 more seats left. Okay. Now, the early birds, other early birds that you get is all of you. I think you have seen this in yesterday. We have recently started. This last year itself, we got SEBI registered, and we are going to give you the SEBI RA's buy and sell trade recommendations for 3 months for the 20 early birds that joined today. And yes, everybody else who had joined yesterday. GWM and LWB, we will, regarding the timings, both programs will be on Saturdays and Sundays. And we'll tell you all about the schedule tomorrow at 8 p.m. when you get started on this journey of LWB and GWM. Okay. By the way, how many of you are excited about these RA calls? RA trade recommendations from our RA entity. See, I don't want to tout our own horn, but I think we also do very selective trades and we do very proper research. And there are a lot of firms who just churn, 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 churn. For them, quantity is material. For us, quality is material. That is what something I can say. And I think you will be very, very happy with the 3 months that you get. Okay. After 3 months, see, after 3 months, I hope that you are able to do all of this on your own. Correct? Be it trading, be it investing, because 3 months I want you to focus on learning, right? Apart from this, the other things that you'll get is you'll get audit sessions twice every week during your live market analysis session by your trading coach. This is again conducted by SWS, our SEBI RA entity. And this is, I think, the biggest USP that you can have when you are learning everything and when you're trying to implement it practically. You will face problems, will have doubt, you will have mistake. So your trading coach can help you on that as well. Avinash ji, sure. See, guys, I'm sorry if I'm missing out on names. If you have done your payment, if you have booked your seat from your end, I'm pretty sure it is captured. If you have received a message, that means it is captured. Okay. The next thing is you'll get daily market updates from Pratik and me to always be on top of the markets. You will have lifetime access to SpringPad's live market analysis sessions every week. And you know what? I think we are going to do it with Pratik and I were just discussing yesterday. I think we might end up making it every day. So even after the program ends, you will continue to receive mentorship and market, analysis for lifetime every day. This is, I think, even after you learn, this will help you be in a community and also share opinions and see other ideas, see important points in discussions. International payments team, can we please share the international booking link to Kiran Kumar ji? Okay. Will I get links? Yes, Shirley ji. And last, but not the least, we move on to our personal finance segments. So you'll get access to a personal CFO. Now, basically, your personal CFO is somebody who is going to sit with you 1:1 on advisory sessions, and you can take advice from them on any of these things. You can take advice on the right credit cards. Okay, this is purely advisory. There is no strings attached. Absolutely free from our end. You can get advice on insurance planning if you want to talk to somebody. If you are making, let's say, decisions in mutual funds, our AMFI registered team can help you with those as well. And if you are making any personal finance decisions, right? Let's say buying a house, buying a car, if you're trying to plan out that uh, process, right? You can get it into a 1:1 with your personal CFO and discuss with them. If they want to give you any guidance, they will share with you, right? This you can do once a year for your lifetime. Are you happy? You get this access once a year for your lifetime. Why are you happy? Personal finance, so you can have a requirement anytime, right? Will you wait once a year? This was a trick question. You get access to this n number of times that you want round the year and for a lifetime. So if you have some query every 2 weeks, every 3 weeks, you can definitely just drop in an email and your personal CFO will set up a 1:1. If he wants to rope in different advisory teams, he will rope in them as well. If he wants to include the credit cards team, he will do that. If he wants to use the mutual funds team, they will do that. So lifetime access as many times as you want. Okay. Apart from this, you will have access to the Money Matters program, which Pratik has already shared with you. Correct? He has already told you it's a small program that you can share with your near and dear ones. And not just for 3 months, you will have lifetime access to your SpringPad LMS, wherein all recordings of LWB, GWM, Inner Circle will be there. So even after you complete the program, it will be like your repository that you can always revisit. If you ever want to revisit a concept, let's say a framework, or let's say features and options, people revisit features and options a lot because there's so much to do. So you always have that repository with all the PPTs, the learning materials, the AI tools, everything. KP Singh ji, I would suggest, book the seat now, and then tomorrow we'll get you started. Okay? I think we have 7 seats left. From nine, I think two are gone. I think, what was the name? Sorry, missed out on the name. But yes, so we have 7 seats left. 13 are gone. 7 seats are up for your taking. Do them now. Okay. Now, so that was all the 9 early bird benefits. Okay. How can I postpone AI accelerator? I will get to all that tomorrow. We'll get you your postponement done, everything tomorrow. Okay. So, just to summarize, what is the total value proposition, right? That you get the entire GWM program, the entire LWB program, and all the early bird benefits that we discussed. All the 9 early bird benefits, you get everything for the price of one, and that too broken across 25 installments that you're going to pay across 2 years, right? I think it's, of course, it's your call, but if you liked the way we taught and if you would like to continue learning, this is something I would say I highly, highly recommend, because I'm very confident of the team that we have built. Pankaj, no point spamming. I will be sharing the resources in the next 5 minutes. Okay? Yeah. Okay? So please go ahead. 7 more seats left and you can book your seat. Okay? All right. And you know what? There is, we have doctors, correct? If you think that you are from a completely different background, how many of you are from a completely different background, by the way? Never had anything to do with finance? Makes you wonder, right? But I think this 4 days has taught you that, you know what? If it's not difficult, it just needs to be logical, simple, and methodical, right? So we have had doctors. You already saw Dr. Trupti. We have had directors who are from the film line, right?
My name is Milind Naik.
Milinji, sorry, I'll just pause you. But we have directors as well. Okay. Now, the I just want to talk to you about something. What are the mistakes traders and investors make? And then I'll give you the resources, right? This is again from a purely educational standpoint. Uh, and let me know if this has happened with you. Okay. Acting without a framework, like you buy or sell because it felt right. Someone suggested it or the chart looked convincing. Has it ever happened to you? And it can be like I entered it because it was going up, and when it started falling, I exited. Right? What happens is decisions are made without predefined criteria for entry, exit, or risk. This is a red flag. Before you ever take an investment, you should all or a trade, you should always decide beforehand, before you put your money, that where will I enter, where will I exit, how much risk am I willing to take. Correct? So this is again one of the biggest mistakes you should avoid. Definitely, definitely avoid. What about this? Confusing activity with progress, like constantly tracking prices, news, portfolio, but without improving decision quality. This I have seen many times. This, tell me, like you are very busy, right? Checking the portfolio entire day, yet nothing is happening. Happened with any of you? Or let's say anybody you know? Yeah. The problem is, see, activity, correct? Activity, more information is not equal to better ideas. Right? Every time scrolling, going through the news, yes, you have more information. Is it helping you better decision making? No, not necessarily. And that is why people get frustrated, right? The other thing is, right, ignoring downside until it appears. Thinking about upside scenarios, not planning for what could go wrong. अरे मेरे को लगा ही नहीं था it could fall. Happens. Enter a stock, you're so convinced. मैं लगा ही नहीं था ये गिरेगा. Right? A lot of people are doing this in gold and silver, by the way, now. Of course, yes, the rally is strong, but like ऊपर ही जा रहा है, कहाँ ही जाएगा, घुस जाते हैं. I think a lot of you would have told this to you as well, right? Very, very problematic. Never, never do that. Always know anything can fall. You don't like gravity. If it goes up, it will come down. Okay? So risk is acknowledged only after losses occur. This is not something that you should be doing at all. And last, letting emotions override process, holding on too long due to hope or exiting too early due to fear. This I'm pretty sure has happened with a lot of you. Selling a position for a small loss, right? Only to see it recover later. The moment it starts going in red, you sell it off. But then it reverses. So it's better to have predefined entry exits, right? It's better to do all this. No predefined rules for uncertainty. It's a problem. You should always do it beforehand. What next? Overconfidence and limited experience. Assuming early success reflects skill rather than market conditions. Anybody? Any newbie trader last 3-4 years? And this the best example is COVID baby traders, right? I'm not, you know, generalizing, but usually I've seen this people who started during COVID, right? Everything I bought worked until, you know, fast forward the last 1.5 years when it has stopped working. Happened with you during COVID, everything that you touched, and it happens with people. The moment that they see success, right? They think like Apuni Bhagwan che, correct? So again, mistaking short-term outcomes for long-term stability is one of the biggest mistake you can do. Another thing, failing to learn from past decisions, repeating similar mistakes without reviewing why they happened. How many of you do this, by the way? Repeating past mistakes? That is why you need to properly journal, learn from your mistakes, right? Learn from it and rectify. And last but not the least, depending on external opinions, we have already covered this, relying on tips, influencers, headlines to validate decisions. Do you feel confident in the if other people agree with your decision? Is that something which happens to you? Yes. If let's say you are in a room of analysts and you say, as per my analysis, this is good, and everybody is talking about something else, right? You don't need validation. Your validation is your research, right? Lack of independent decision making, don't fall for it. And why are we discussing the mistakes, guys? You know, there's a saying that failure is the best teacher. Good thing is, right? Failure is the best teacher. Why are we talking about this? If you look closely, most long term underperformance doesn't come from intelligence or effort, it comes from repeated decision errors, right? And but there's a saying, as I said, right? You know, failure teaches you. But the good thing is, the failures don't need to be your own, right? And that is why we have designed this program to address exactly these gaps, building frameworks, understanding the risk before reward, improving decision discipline, and learning how to think independently under uncertainty. Okay? And you know what? Again, I will say there are no guarantees in the markets, but there is a clear difference between reacting to markets and participating with structure, clarity, and intent. Right? And I will just finish off by saying education doesn't remove risk, it helps you understand risk before it matters, before it becomes risky for you. It helps you preempt and understand it, right? That is what the entire goal of our programs, the LWB and the GWM, are, right? And I can take you through so many examples. We have Karanji, who is a we have Saurav, who is a sales head, and there's so many people, right? For example, we have Venkateshwar Raoji, right? He loved the safety first approach that we from Hyderabad, their emphasis on risk management, both in trading. So he loved the safety first approach. We have Shubrat ji, who is a engineer, right? He has learned and benefited from this. There's so many people that we have, you know, who have joined this, who have learned and taken on their own journeys. And you know, I'll just finish off by saying before I give you all the resources that literally uh you have two choices, right? I want to be at the risk of sounding very blunt. One is to take a considered step towards building financial knowledge, discipline, and long term decision making skills. Rather than choosing not to act now and continue with your current approach, reflecting later on whether learning earlier could have helped or not. Right? These are the two choices which you have. Now, I'll tell you something. If you study long term market data across geographies, one pattern shows up continuously. Outcomes are rarely driven by constant activity, but outcomes are decided by very few decided and decisioned actions that you take with discipline. Most investors don't perform because they lack, underperform because they lack intelligence. They underperform because they delay learning on how to evaluate risk, businesses valuation. By the time that they feel ready, the cost of not knowing is already reflected in missed opportunities or unavoidable, rather I would say avoidable mistakes. Correct? This slide is not about guarantees, it's about whether you choose to start building that decision making capability right now or postpone it. It's a clear call to all of you. And now again, there are, just a second, there are five more seats left. I'll be sharing the resources. Five more seats left. You can book your seat and let me know. Okay. First and foremost, the resources for day 4. You can scan the QR code over here. Okay. Okay. And you can get the resources. Scan this now. I'll be sharing the resources for day 3, day 2, and day 1 again. Okay. Vidyaji done? Perfect. Perfect. So I think we have 4 more then. Will the 3-month access given after the completion of trading to apply learning properly? So you will have access to Bullseye to start with. We'll be giving you a proper debrief and the RA calls of how to use it, what to do and not. So you'll have it to start with. And after the end of the teaching part, you will continuously have access to the live market sessions. So rather the market analysis sessions, and you will also get some additional support from our end. Karishma ji, can we still register? Yes, Karishma ji, I think we had 5 left. Vidhay ji did, so there is 4 more left. Karishma ji, you can do it now. Okay? The team is sending the link in the chat. Okay. 70 pages. So I finished my part today. The team will be finalizing the PDF and they will be sending it out to you by tomorrow morning. This you will get on WhatsApp, right? All the note that I said, the FFA notes containing all 4 days, everything step by step, whatever we have covered, all the details, all the A prompts, what to click, what not to click, with screenshots, everything. So the team will be going through it again. So I think 2 days are done. Day 3 and day 4, they will create today. They will add and they will send it to you by tomorrow afternoon in your WhatsApp. ठीक है सुमित जी? Thank you, Baswaraj ji. Can day 3 resources be shared? Yes. So all of you, you have got your day 4 resources. Yes. Can I move on to the day 3 resources? Prompt is in here only. You scan the QR code, everything will be there. In a Word doc, all the links will be there to the prompt, to the custom GPT, everything. We will start tomorrow itself. 8th, 8 p.m. tomorrow. We'll get you started. We'll get you to do a little bit of prep work and everything across the next 2 weeks. And from February 1st week, we'll get started with the 3-month program. So we are starting from February 1st week, but don't think that we're not doing anything in the next 2 weeks. These 2 weeks are also very important to get the house in order, to get you your relevant accesses, to get you set up on a few basic things, give you a few basic learning, all that. Okay. So now that you got your day 4, so this is day 3, by the way. The team will be sharing the day 3 link again in the chat. You can scan. I'll wait for 5 seconds, then I'll move on to day 2. Okay. Thank you, guys. Yes. All of you, if you have booked your seat, if you have done everything, we'll meet you at 8. Okay? If you don't have any questions, you can definitely drop off. Okay? So that was day 3. Day 2 resources, you can scan this QR code and I'll shortly share the day 1 resources as well. Just a second. The day 1 resources. Okay? So Sunilji done. Okay. I think that leaves us with 3 more seats. Correct. So I've shared all the resources. You can take them. The team has also shared them again. If you're still registering, we have 3 more seats left. If you have any question with respect to that, I'll stick around. But yes, if you don't have any questions, please feel free to drop off as well. And all of you who have registered for LWB GWM, just a reminder that we'll be meeting you uh, tomorrow at 8 p.m. sharp to get you started on your journey. Notes, as I said, guys, just because we did the day 3 and day 4 today, right? I'm just completing day 4 now. So the team will take some time. They'll